So today we're going to talk about buyer's area and seller's area. Okay, we're going to talk about buyer's area and seller's area. So when we talk about buyer's area, like I've always said, that if you give me some minutes. So we're going to talk about how to trade on buyers and sellers area on ranging markets, trendy market, and consultation area. This is the video I made some days ago on how I trade on buyers and sellers area. Someone said you can't hear me.
I can hear you now.
Okay. I think everyone is smooth. Okay. So today we're going to talk about how to trade on buyers and sellers area. So this is the video I made some days ago, how I trade on buyers and sellers area. This video. So I made this video how I trade on buyers and sellers area. It is because of network. That's why I didn't upload it on YouTube. So I will explain deeply how I took this trade. The market is not good. You can see the payout 60%. And also look at this. Look at all the candles. Look at all the candles. You can see so many wicks. So there's something I want to show you here when you want to trade on bad markets. You can see the market is very bad. And this trade, I took it in the night. It was in the night I trade. I took this trade. So because I didn't have chance in the day, that's why I just took the trade in the night, just for me to recover, just for me to cover up my daily target. But because of that, I wanted to upload it on YouTube, but I couldn't upload it because of network. You can see that the profit is 60%. 60%. Not only that, if you look at the candle closely, you will see so many long wicks, rejection, long wicks, doji candlestick. So there's one trick here I want to show you, and some of you might be aware of the trick. So you might be aware of the trick, but there's one trick here I want to show you how to trade on buyers and sellers area. If you look at this area, this is where I don't want to, I'm not using any levels or support and resistance or something like that. This is the area I want to trade on. This area. You can see this is consolidation area. This area here, this is consolidation area. You can see the market went up, reversed, rejected, then buyers went up to this stage, then sellers entered. Again, buyers is trying to enter the sellers area. So it means that here and here, this area is sellers area, while this area is buyers area. So when I saw this, I decided not to use the left side. That is, I decided not to analyze anything on the left side. So I just only want to take trade in this area. In this area. So this is the area I focus on. And there's one trick here I want to show you guys. So I was explaining, then I draw the seller's area and again the buyer's area. You can see here, I indicate the seller's area, I indicate the buyer's area. And this is a consolidation area. The market is consolidating. So there's one thing I want to show you here. And if I show you, you too might be likely to be trading on bad markets. And that is the trick, that is the trick of bad market. Once you see this kind of situation, once you know that trick, then you can start placing your trade. Some of you might be aware, but no problem with that. Okay. So now I have indicated the buyers and sellers area. That is, the sellers are here, the buyers are here. Now watch this candle. Watch closely at this candle. You can see that this candle went up. So I look on the left side. I saw that this is a bearish, bullish candle because there's no sign of sellers, no sign of buyers. That's why we are seeing sellers entry. No sign of buyers here. That's why I said, but you can take it as again is a presence of sellers at that area. You can see that we have a seller's entry here, followed by a bullish candle, but no sign of buyers here. If you check on 5 seconds, you will see some buyers entry here. But because it closed exactly at the open price, that's why it closed as a doji candlestick. Okay, that's why it closed as a doji candlestick. So now look at this candle. Look at where it closed. Just pay attention to it. Look at it. It closed above this this upper green candle. That is this doji candlestick. You can see it closed exactly at that level. It closed exactly at that level. And look at where the sellers entered. Look at the opening price of this bearish candle. The bearish candle, the opening price of this bearish candle is here. So here the sellers entered. You can see that it closed exactly at that area, not below, not at the body of this bearish candle, but above the body of this bearish candle here. So when this bullish candle closed at that area, you can see that it closed above this bullish candle and above this bearish candle, and there is a rejection here. So it means that from here to here is an area, and this candle closed at that area. Now watch what I did next. Immediately I want to place my trade. I want to place put option. The market executes at that same area. So I was watching this side, assuming that it closed, assuming that this bullish candle closed somewhere at the body of this bearish candle. I will place call option. But it closed above, telling you that from here and here, okay, for me, telling you that from here and here is seller's area. You can see the opening price exactly at the seller's area. Assuming that this candle, the time I place my cursor on a lower option, assuming that it closed, if the market try to gap down a little bit and maybe want to open below this bullish candle, I will just immediately place call option. But the opening price of either the bullish candle or the bearish candle will open exactly at this area. Now what next? So I place put option. So I was explaining why I place put option here. So most of the time I will not show you some secrets why I place put option here. The secret is what I just said now. Why I place put option here. I just indicate that the buyers are here, the sellers are here. I just indicate it. But See inwardly, this is the line I was looking at, that it should close above all this bullish candle and this bearish candle. Now watch. You can see look at how this candle is fluctuating, telling you that the market is very bad. But I'm sure that this candle will close as a bearish candle, even though you went up to this extent and close with a rejection. It will still close as a bearish candle, if not a doji candlestick. And if it close as a doji candlestick, I will go with buyers. But watch. So I can see that the market is fluctuating. Now, when I saw this bearish candle here, I noticed the second one on the left side, the one of buyers area. The one of buyers area is here. Look at this. You can see after this bearish candle, buyers entered. So the opening price is here. That means from here to here is buyers area. Buyers area. Now look at what happened here. For me. Look at what happened from here to here is buyers area. Now look at it. And here is buyers area. You can see that this bearish candle closed at that area. Why this one didn't reverse is because that is the starting of the buyers area, not now it should reverse. But here, this is the starting of where buyers will enter. You can see that this bearish candle closed at that area. It closed at that area. And then buyers enter. You can see where this bearish candle opened. It opened at the seller's area, which I was explaining before. So because you open at the seller's area, sellers still entered again on the next candle. Now sellers enter on the next candle, still open and close at the same area, then sellers enter. Now look at where this bearish candle closed. It closed at this area, at this buyer's area, then buyers entered again. Now watch how this candle closed. The candle now closed at the same buyer's area. Watch very carefully. You can see where it's about to close. So I have not known if it's going to close at this buyer's area or at this seller's area. So let's see. I can see some rejection telling you that the buyers are here are strong. I saw this bullish candle. I didn't lose my focus. Now look at where this candle closed. If your height is clear, you will see that it closed below this bullish candle. Look at this dot line you are seeing here. It's already drawn the line. You can see, you can see this dot line. It's close below this bullish candle, telling you that from here to here is buyer's area. Now look at where exactly the next candle opened. You can see where it opened. It opened at the buyer's area. So this is one trick. Once you see a candle close and you don't understand where is the buyer's area and the seller's area, just wait for the next candle to open. If the next candle should open here, you should maybe immediately just form a bearish candle. Just wait for the candle to reject at that same level, then place put option. But if the next candle opened here and it just went up, you can place put option, but it will still close as a bearish candle. But look at where the candle opened here. The opening price of this bullish candle opened here, because I know that the next candle will be bullish because of this, the dot line, this where this candle closed. Let me show you where. You can see it closed below this bullish candle, this doji candlestick. So this dot line, this bullish candle closed. That means that this is buyer's area. Now look at all the way where this candle opened. It opened from here, telling you that you should wait. Immediately you open, you can see it doesn't give any chance for me to place call option, but I wait for it to go below. Let's say like rejecting for for some pips. Then I place call option and watch. So immediately I just saw this bearish candle, I just placed call option because I know it will close as a bullish candle. So I was indicating that this is the buyer's area, but it never know that this is what I'm looking at. This is what I'm looking at, not here. So the explanation I took was just to confuse some. So this is area I was looking at. Okay. So it will close as a bullish candle. You can see at the last second it closed at the bullish candle. Now look at this, where this bullish candle closed. This bullish candle closed here. You can see from here to here. After this bullish candle, you see some seller's entry. Now this bullish candle closed here. You can see it closed above, telling you that from here to here is seller's area. A seller's area, and it closed above this level with a strong rejection. So I didn't think twice. I immediately placed put option. You can see later I saw that, okay, I just placed put option because the market is not steady. So I placed put option immediately. I didn't think twice because I saw that the candle closed above this area. So if you want to be trading like this, you'll be trading. If you want to be trading, I just choose a market like this consolidation area or a small ranging market before you can trade like this. So I know it will close as a bearish candle. Now watch where the candle closed. You can see the candle closed here, and look at it. We already got our buyer's area. No need to think what will be the next candle. Just place call option immediately. You can see this bearish candle. It closed here. Then from here, then inside this bearish candle, buyers enter. So from this bearish candle to this area, this is buyer's area. This is buyer's area. Now this bearish candle closed at the buyer's area with a strong rejection. When you see rejection, telling you that the buyers are present here very strongly. So it closed here, and look at where the opening price opened. So if the opening price still open at the buyer's area, just place call option. Assuming that the opening price still open here, maybe there's a gap up, just place put option. Most of the time, IQ option broker or some broker, they use this to deceive or to make some trader lose by all this gap up. You can see the same situation that happened here. The same price that opened here is still open here. It's still open here, the same level. So assuming that the open price of here is of this, the next candle open here, which is above buyer's area, the next candle will be bearish. But look at where it opened at the whole buyer's area. The whole buyer's area. Now I just place call option on the next candle. So immediately I saw that, I placed call option on the next candle. And definitely it gave me a winning trade. I was in the explaining about this rejection, but you never know. I will not let you know that this is what I'm looking at. Okay, so buyers enter. So this is the fourth trade I want to do here. So I stop trading for that day. And look at where this candle closed. Look at where this candle closed. So I stopped trading for that day. Okay, that is how you can trade on buyers and sellers area. So before I continue, let someone ask me a question.
Teacher, could you go back to the chat?
The chat.
Yes.
Okay. Is it the video or the chat?
The video, sorry.
Okay. Yes.
You zoom in.
Okay. Something like this.
Zoom in more. Maybe go forward a bit. Okay, now,
Okay.
if I was the one, help me understand it. If I was the one looking at the chart,
Okay.
what I found you picked this. Just a moment. I thought I want to draw something. Yes, you picked these two candles.
Yes. I picked
To
this.
yeah, to establish. You picked this one and this one to establish the buyer's area.
Yes, this one and this one establish the buyer's area. Why this one and this one establish the seller's area?
So my question is why? Because me, I would pick these two because I see a strong buyer's entry here. Then I would say the buyer's entry, buyer's area is from here to here.
There's no mistake there by choosing this.
Okay.
I see where the candle open at this area. But to be on the safer side, most of the time when the candle open here and you are thinking maybe you should place here or wait for the next candle to reach here or you place put option to continue, but you never know that the market will reverse because of this. That's why I took this one as again as one of the buyer's area. If I should be looking at this without considering this, maybe a bearish candle just formed here, I would just say maybe I will place put option just to continue to do the, but no. And if I place put option, the market might reverse and I will lose the trade. So because of that, I use this, both this and this. Assuming that there's no thing like this one,
okay,
and you know this kind of situation, that means you'll be using this one. You'll be using this one as your buyer's area. But because presence of this, that's why I use those.
Yes, it's more advanced.
Yes, what do you say?
I'm saying this one needs a lot of experience to pick this. Yes. I couldn't see it.
Yes.
Hello, teacher.
Yes.
Thank you.
Considering the two lines that you drew,
yes,
what points did you really consider, like the one for resistance and the one for support?
I choose the one, the line I draw was because I draw the line to touch this, just to touch all the wicks. But if I want to draw the complete area, I will draw it start from this highest point. I will draw the complete area starting from this highest point, then the lowest body of any bearish of any either bullish or bearish candle. So I will use that as my seller's area from here to here. And this one also, if I want to draw the buyer's area, I will use the opening price of this candle to the lowest point as my buyers and sellers. That's why this candle is forming a consolidation area. That means the buyers and sellers are very close to each other. You can see there's no even a gap, a peak at this area where I choose the buyer's area. See the same stopping point of this area, I choose the same starting point of this for buyer's entry.
So from the explanation, meaning that considering where this last bullish candle closed, the next candle will be bullish.
No, bearish. Okay. Me here.
Yes.
Me that it's close here, the next candle will be bullish.
Yes.
Because it's close at the buyer's area. It's still close at the buyer's area. So the next candle will be bullish.
All right, thank you.
Yeah. Okay.
Hello, sir. Hello, sir.
Oh, all right, we are listening.
Assuming from what you said now,
Okay.
assuming this candle was bearish and this one is bearish,
Which one? You mean
this doji, assuming it's bearish,
okay?
and this one also is bearish,
Okay.
where will I consider now as the bias area?
If
Is
this one
it,
was bullish,
no, let's just say these whole candles were bearish, 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 then this one is bullish.
that means you use the first one. This one.
Okay.
Consider this one as the bias area because this one there's no bias, there's no green candle here. There's no sign of bias here. So you use this one as bias area.
Okay. Thank you,
Here
sir.
you can see bullish candle. This is doji candlestick. So that's why I take it as bias area.
Hello, sir.
Yes.
Are we considering this doji as the starting of the ranging market? Oh, I don't know how.
The what?
You say
What is it?
doji that we are using it as the buyers and sellers area. We are considering it.
Yes.
Is that where the ranging market started? Yes.
Yes, that's when the ranging market started. The consolidation area started. The market starts consolidating when buyers do not form a bullish candle, then sellers enter. So because there are some buyers here, if you check on 5-second chart, there are some buyers here. So that's why buyers enter as a sign of buyers present here. This doji candlestick, so buyers enter. So this doji candlestick starts the consolidation area here. That is from here to here. That's the consolidation because no sign. Most of the time, it usually happens after this candle, a week bullish, then that enters, then buyers enters. So it's not only that able to candlestick, then you can take it as the starting of the consolidation area, but it should be any kind of candle, maybe a bullish candle, a strong, if a strong bullish candle, we say strong bullish candle here, as close here and seller center. Again, bullish candle that close at that area, seller center, then you can take it as consolidation area.
Thank you, sir.
All right. Any more questions? Okay. So let's move forward. So I'm coming. So I want to bring up another video. So I want to explain. Let me bring up the one I did yesterday on the main chat and explain to you this one. So I will explain this one to you, how I trade this. It's the same method I applied on this, but I didn't indicate that. I just cite it, then I place my trade. For me, nothing else. Yeah, this one, I took this trade day before yesterday. So there's one thing I was looking here why I placed my trade. Let's see how this candle close. You can see here that we have the buyers and sellers area. We have the buyers, the sellers area here. You can see there's a rejection in this bullish candle, so we can count this space here as the sellers area. As the sellers area. So now watch where this bullish candle close. So immediately I just noticed that. Immediately I just noticed that. I just look at this candle. Okay. Immediately I noticed that. I look at the candle where it's closed. You can see. Now the candle closed here. Look at it. The candle closed somewhere here, and sellers entered here. You can see this space. You can see the sellers entry here. You can see that though the rejection band is here, the rejection band is here. But if you look at the seller's entry, you will see where sellers entered. That is the space where buyers close and sellers entered. The sellers entered here. That means this whole area from here to here is a seller's area. Now watch how this bullish candle close. Immediately close, sellers enter. So I just follow the rules. So you can see that sellers entered at that same level. Assuming that the opening price was still here, I would have placed call option, but it opened where this candle closed, means that the sellers are there. The sellers area which I've shown you. So it opened at that same level, then sellers enter. So I wait for the market to reject up a little bit before I place put option. So it was the network that caused the delay. So I was thinking maybe if I will not win this trade, but I won the trade. You can see where the candle opened. It opened at this area from this rejection band and the closing price where sellers entered. Sellers entered continuously on this level. Sellers entered, sellers entered, sellers entered, sellers entered, sellers entered. That means this whole area is a seller's area. And look at where this candle closed. And you can trade like this if the market is ranging. That is, the market is ranging like this, like this, like this. Assuming that this is a strong, you don't trade like this when you see a momentum. When you see a momentum like this, don't trade, except the market is ranging. That's why I say that how to trade on buyers and sellers area on ranging market. So let's see how the candle close. Now, immediately the candle close. There's another thing I want to show you about buyers and sellers area. When you see something like this, a turning point, turning point, turning point, turning point, then a breakout. Again here, a turning point, turning point, turning point, turning point, turning point. That means this area is a buyer's area. Then again, a turning point, a breakout. So this area here is a buyer's area. Buyer's area. That is from this turning point to the lower side here. It's strong buyer's area. Let me draw the line. Draw the line. This is where I choose for the buyer's area. This, the turning point here, and this, okay, and this. Turning point, turning point. Let me indicate that. Turning point, turning point. Here, 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 and here, and here also. Here, here. So from here to here, that's why I choose as buyer's area. Now look at where this candle closed. The candle closed here, and there's a rejection from buyers here. So it means that the buyers are interested here. Immediately I saw this, I didn't draw the level, but I noticed that. But I noticed that I just saw it there. then I just focus on this bearish candle where it's closed and where the next candle should open. So the rejection was here, and this candle closed. Assuming that the next candle open in this area, I will place stop. So I just look at how the candle will open next. But because of my entry, I lost the trade. Now watch. So immediately I saw that, I just look at where the candle opened. The candle opened here, not this rejection area where the buyers are entering. The candle opened here. If you look at it, there is a small gap. There is very small gap as where this candle opened. The very small gap. So I was looking at the market very closely. So if you have a short sightedness, you can see it very well. That's why a small gap in binary option, if you don't observe that a very tiny small gap, you can lose the trade. So I just saw that there's a very small gap to this level where I placed my line here. So I didn't place my line on the trade I took during the time I take the trade. But now that I show you, that is where I place my line. That's where I place my line. You can see that there's a small gap. Now watch. Immediately I saw that there's a small gap, I placed put option, but definitely it closed below my entry. It closed above my entry. So it means that here, the buyers are here, not here, and not here. You can see the opening price is here, and the closing price is here. So the buyers are here, not here. You can see when this bearish candle touch that same area which I have drawn, the buyers still rejected, telling you that there is a strong bias. And look at how this candle closed. It closed as a weak body, as a weak candle, because previous candle was very strong. Now this candle closed as a weak candle, telling you that the buyers at that area have already dominated this bearish candle to become weak, not to continue again, not to continue a minor downtrend. So it has already become weak, not to continue a minor downtrend. So I lost it because of my entry. Once I observed that, I noticed that buyers will enter. No doubt. No doubt about it, buyers will enter. So immediately I lost this trade. I just opened the tab again. Then I placed call option. You can see that same area, this same rejection area, this rejection, buyers entered. This rejection, buyers enter. You can see the opening price from here, buyers enter. So I placed a call option here and I won the trade. So just observe the candle closely before you place your trade. Now, as this candle was forming, I was watching the left side. That same level, this same level, this one, that is the area, the seller's area. I was watching it where it closed. Immediately I see that it closed below this turning point and this one. There are some turning points here, but it didn't close below. But we can still count it as seller's area. But I saw that it closed below, above, it closed above this turning point. It closed above this turning point. Then I just placed put option. You can see that I've already placed my cursor on the lower option. You can see where the market even opened. The market now went and opened still at the same buyers, seller's area. Seller's area here, seller's area here, seller's area here. The market still opened there. Assuming that the market opened here, I would have placed call option. Assuming that the market opened here, I would have placed put option. But still, the market still open here because from here where the candle closed and here is still seller's area. So I placed put option here. Yesterday when I was explaining to you guys, I didn't explain everything. You can see the sellers entered here. It's still closed. It's still open from this seller's area. Yesterday when I was explaining, I didn't explain that to you. I didn't explain that before, but I just want to explain that today. That's why I was who is opening and entering. Now look at how this candle is closed. It's closed in this bearish candle. It closed the same way this one closed, which is the buyer's area is here. So no need to check the level again. You should know that the next buyer's area is here. I just checked the level just to confirm. Maybe if we close above, or maybe we close below, if I can see any buyer's area, if we close at this area. But that's not what I'm looking at. I'm looking at if we close here, I will just place color. So I place put option because the buyer's area is here, not here. Now you can see that the market starts ranging, a small ranging or consolidating, and this is a double top, double top. This is a double top. So it's a confirmation that the next candle here will be bearish. Ranging, buyer's area, double top. So it's a confirmation that the next candle here will be bearish. Now, when the candle closes here, okay. Now, when the candle closes here, I already told that this is buyer's area, and this is also buyer's area. That's why, because this is buyer's area, buyers did not, sellers did not enter here after this bullish candle, because that is that area that I'm showing you on the left side is buyer's area. Now watch where this candle closes. This candle closes exactly at that same area. From this point here, this rejection point, and this, it closed at that area. So this is the area I was focusing on. This is the area I was focusing on. So I didn't check the left side again. I just focused on this. So it closed at the buyer's area here, and the point, the rejection point here, where buyers entered, and here, where buyers break the level, because that is the buyer's area on the left side. So sellers cannot enter. You can see that there's no lower rejection here. So sellers are not interested. That area was possessed by buyers. So that is why bullish candle, the next candle was bullish. As soon as in seller's area, sellers will enter. So I just placed call option. Immediately this candle closed at that level with a rejection. So another point that if this candle didn't have any rejection, you can go with sellers. Assuming that this candle didn't have any rejection, you can go with sellers. So take note that not all the time my Bozu candle will work as a reversal. It also work as a continuation of this downtrend, bearish downtrend. So immediately, if this candle will close with a rejection, when I just saw this rejection, I know that the buyers are present. So I just placed call option on the next candle. And the opening price is still at that same level. I'm coming. Just after this video, can ask any question. So I was now focusing on this level. I didn't check this one again. I'm focusing on this level here because the sellers that are here, they are now here, this area. The sellers that are here before, they are now here. So that is where I'm focusing now when I'm seeing this bullish candle forming. So immediately I see that it closed here. Immediately I noticed that this bullish candle closed here instead of here. I just placed call option, telling you that this is the next, level of reversal. Okay, so there must be, because of coming, guys. Okay. Now, because okay, now because of this, this some sellers entry, because the sellers entry you are seeing here, because there are some sellers at that area, but the sellers now change their entry to this area. So it means that the next candle here will be bullish. So don't worry about seeing a bearish candle here. You can see it definitely closed as a bullish candle. Now a continuation sign. A continuation sign after this strong bullish candle, a bullish engulfing and a minor uptrend telling you that it will continue to this level. A continuation sign, that is a spinning top candle. You can see that the candle starts for me. A continuation sign already started when this bearish candle show up, telling you that there are some sellers here, but they change their entry to this area. They change their area. So now the sellers are here. So buyers will continue. And it's closed as a bullish candle, as like a spinning top candle. That's a continuation sign. A spinning top. That means buyer will still continue. You can look at where it closed. It didn't close above this bullish candle, or here, or here. And the next candle opened. So that means buyer will still continue to that level. Okay. So that is how you can place your trade on buyers and sellers area. Now look at where this candle closed. If your eyes is clear, you should not place put option here. This is the level. This is the level. I don't know if I can draw it very well. So I want to draw it very well. You can see that the opening price of this bullish candle is below. You can see there's very small gap, assuming that the opening price was here. The next candle will be bearish, but the opening price is below. That is very small gap. So there's no doubt about it. Just place call option on the next candle. So this is how you can place your trade on ranging market or consolidation area. Let me see if I can see any more video.
Do not leave that chat, please. That video.
Yeah.
I wanted to ask on that video. Yes?
Okay, I'm coming. Okay, something like this. Are you okay with this?
Almost close to the end.
Yeah? To the end.
Almost close to the end of the video.
Okay.
There. That's okay. That's okay.
Is that okay?
Yes, that's okay. Now, I observed that you drew your bias areas from somewhere. You use this candle and somewhere here.
Yes, the bias area. That is the point here, and the body of the candle here as bias. I will show you how to draw this. I will show you.
Because I don't understand how that happens.
I'll show you how to draw it.
Because I thought bias area now would be this here and here.
And you can still take this as the bias area, but the candle didn't close there. It's still close as this turning point. This is SNR level. The buyers there are waiting to buy the market. This is SNR. A support here, resistance that became a support. So it's external level. The buyers there are waiting to buy the market. So the real buyers area is here. The real buyers area is here. So I will not place put option because it goes at the external level. So buyers there are waiting. Buyers are here and buyers are here. So there's no specific place where buyers are waiting or something like that. Buyers can wait even there. If this candle will close as a doji candlestick, the buyers can still wait here to still buy the market. So you need to be following what the market is doing, how the market is behaving. Okay.
And could you repeat why you sold here? You put
the line, the buyer's area.
I think you traded a put on this candle.
Yes. Okay. You mean as you go back to the reverse the video?
Yeah. Why did you trade a put on that candle?
Okay. This is why I placed put. Okay. This is why I placed put. This. And this. This is why I placed put. This area, this turning point, this turning point, this one, this one, this one. You can see the market reverse so many times on those levels. And this one, this one also, this one, this one, this one, this, and this. We can also take this one as well, and this one too as well. So that's the next level for the buyers. The next level for the buyers.
Okay.
Okay. Any more?
So will I say you traded a put because it had not, there was a gap?
Yes, I placed put because it did not reach the buyer's area.
Okay.
Buyer's area here, not here. So I placed put, but because of fast momentum and my late entry, the market pushed my entry to this area instead of here.
Okay.
Instead of here, the real area is here. And again, the market pushed my entry to this, and there's a very small gap where the market opened. So that's why the next candle should be. So that very small gap make that with this rejection, made this bearish candle become weak. The buyers entered immediately.
Okay.
Hello, teacher.
Okay.
Okay, my question is on the point where you said that sellers change their entry point.
Okay.
You know, for some certain reasons, at times when one is trading, one might still be considering those previous levels. So, like, how many shifts do we really need to observe to know that sellers or buyers have shifted or changed their entry point?
That is turning point here. Okay, guys, give me some minutes. I'm coming. Okay. So that means, okay, that means here, why they change their entry point is that think I should go back to the area. That means you should be following the market. Following the market. The market will not use this area anymore. We have already gotten our area here. We have already gotten our area. So this is the area we're focusing on because of this uptrend. The market now wants to continue uptrend because here the market was trying to think at this area when it started consolidating, was trying to think maybe continue going up or continue going down. That's why the market is trying to think here. But when you now saw that the sellers and buyers are now fighting, now the sellers that are here, they now change their entry to this area. So the sellers are now here. You can use this for some instance if the trend here is not uptrend. Maybe the market is still in ranging mode. That is from here to here, then you can use this. But because the trend is uptrend here, and this strong bullish candle telling you that the confidence of buyers to continue to this level. So you should follow the market that the market will not use this. Will not use this level again. It will use this. So the next level is here. The next level is here. The market will not use this level. You can see already, we can see some turning point here where the bullish candle closed, but that is not where the market is obeying. The market is not using that level again because of this trend. So the market, because of this trend, that's why we always say don't go against the trend. At this time, you should not follow the trend. Here, you should be considering the area, buyers and sellers area, but now you should follow the trend because the consolidation area has ended. So now the buyers want to continue their journey. They continue from here. They reach here. Sellers start stopping them. So now the market was thinking otherwise, should I continue for the sellers or should I go for the bullish? Now the bullish now has the more power to push the price higher. So that's why the market starts going up. The market even breaks this level and goes up, telling you that the trend now has started. That is, the buyers are now started their journey. So at this time, you should not be focusing on this. The next area you should be focusing is here. So if there's any confirmation that where this candle will close and it closes at that area, if there's any confirmation that the candle will close at this area, then you can place put. But there's no confirmation. The confirmation of buyers to continue the trend is that spin it up. Once I saw the spin it up, assuming I want to take one trade, I will have predict more than 7 candles. But once I saw this spin it up, I already have in mind that the market now ready to continue. That spin it up is now a sign that though we have sellers area here, we have sellers area here, but because of that sellers area that we have, no sign of sellers at this area. So it's now a sign of bullish candle as a spin it up. So a continuation sign of this trend, that means the buyers will continue this level. If buyers now misbehave on this level, sellers will enter. But if buyers show their power, maybe by breaking the level or something like a Margozu candle or see some weak candle, it might continue. So once you observe this, you are reading the mind of the market, then you can place your trade confidently.
Peter.
Yeah.
I think you need to give us exercise on identifying these areas so that we
okay, I'll do that.
Become good at it. We need an exercises.
Okay. Yeah. I will even show you how to draw the area, how to choose buyers and sellers area here. I'll show you. Let me see if I can. Let me see one more video. Yes, the same rules of that consolidation area that I trade. You can see that not until you trade on real market, you can also trade that on OTC market. You can see this is OTC market itself. So those trade I show you is on real market. This is OTC market. So it's the same rules I use on trading the consolidation area and or range market. So here I place put option because I can see that the market is fluctuating. So I was thinking if the market will still go down because the next level that we have is here and here. But I didn't notice that the level is here. The level has been this level. Because that is the level that is here. I didn't know that the level is here. There are some buyers at this level. So I was hoping for the market to reach this level and this one or this. So that's why I placed put option. But not knowing that the level, there are some levels here. If I show you on the left side, I saw that level, but I didn't notice that. So that's why I just placed put option. Maybe the candle will still close as a bearish candle, but it's close below my entry. So I count that as my log. So now look at the same rules I apply here. This is the level I was thinking for the market to continue. Now look at how this candle close. Look at how the candle close. The candle close here. The same closing price of this bullish candle and the opening price of this bullish candle, the candle closed there with rejection. And now the market is consolidating from here. From here. The market is consolidating from here because we have a weak bearish candle, a weak bullish candle here, followed by sellers. Buyers, rejection from buyers, followed by buyers. Buyers again, sellers. Sellers again, buyers. So here, this area, or we can count this one starting from this upper wick here, and the closing price of the body of this bullish candle and this bullish candle where sellers enter is the sellers area. The sellers area. Now look at where this bullish candle closed. It's closed with a rejection on that area. So I observe the candle. That's why I say observing the candle motion is very important. So I was observing the candle. If I should go back and be drawing levels, I didn't notice that. If I say maybe this is a continuation, I just place control. I was observing the candle closely. So I didn't disturb myself to go on the left side to be checking levels or so. So once I saw that, I can see that the candle even close open at this area, this seller's area. You can see the opening price. So immediately I saw that, I just go back again. I saw that the seller's area is here. Because you can see it close, it opened above all this, above all this. When I saw that, I noticed that assuming I didn't go back to check all this levels, I would have lost this trade by placing port. But when I go back again, I check, I see that the area started from here and then it ends here. This, it ends here. So when I saw that, I just noticed that, then I just placed my trade with put option. Assuming I didn't go back to check, I would have lost this trade by placing port because it's closed above this where there's no rejection. So once I saw that, and the candle is still thinking about to form the next candle, so I just placed put option. So I was confirming that, assuming that the candle closed here. Maybe I should place put option. When I saw that there's another area there, a strong sellers area, then I know that there's a area where this candle opens. So I just place put option. Okay. You can see I was even explaining that area. And this one also, that the sellers entered here, and the trend also is downtrend here. Okay, so I just place put option. Now watch where this candle where this bearish candle will close. Watch closely. You can see where it's close. It's close below this bullish candle. You can see the dot line. It's close below this bullish candle. It means that buyers will enter with a rejection. Buyers will enter. So from this closing price of this bearish candle, the closing price from this bearish candle, we draw the line. Let me draw it very well. The closing price of this bearish candle and the lowest point here, that is the buyer's area. From here to here is buyer's area. So now watch how the candle will close. You can see it close exactly at that level, buyers enter. So look at what I did. That's why you not all the time you be taking trade. This is what I did. Hello, can you hear me?
Yes, we can hear you now.
Okay, the network. I don't know what's wrong with the network now. Okay, as I was saying, look at what I did here, where this candle closed, because I'm confused here if I should go with buyers or sellers. And look at what I did. Not now. Okay. So if I wanted to place call option, I just went back again to check, to recheck, so that not to be confused. So I went back again to recheck and look at my cursor. There's a line where anywhere you place your cursor on the screen, there is always a line. So I place my cursor here just to confirm where this opening price open. You can see I confirm it. Immediately I confirm that I place call. So when I confirm that, I just place call because it's still at the buyer's area. Then again, the seller's area is here. The seller's area. You can see the opening price. Seller's area here. This from here to here, here to here, here to here, seller's area. And this candle close there, sellers enter. Now watch where this bullish and bearish candle will close. Some trader will place put option after seeing this strong bearish candle. But you never know that this is also buyer's area. The point here and the buyer's entry here. The point here and the opening price of this candle is buyer's area. And this candle close at that area with rejection, telling you that the buyers will enter. Assuming that it closed as a, even though it closed as a Margosu candle, you still place call option here in this kind of situation because this is a long bullish and bearish candle, a long bearish candle. So even though you still close as a Margosu candle, you still place call option. But if we close something, close as a strong rejection here, maybe like hammer, and the closing price is here, then you can place put option. But the closing price is not at the seller's area, but at the buyer's area with a rejection. So you should place call option here. So I place call option. Then when I place call option, I went back again to check the level. I went back again to check where this bullish candle closed. I saw again a seller's area, which is here from this point here, this point, and this one, starting from here. Let me show you. Starting from here to here or to here, that is also seller's area. That is also seller's area. And this candle close at that area with a rejection. So don't place call option telling you that just say no. This is a rejection from the seller's area and it's closed at the seller's area. And this is a weak bullish candle compared to previous bearish candle. So the next candle should be red. That's why I place put option. Don't say you want to place call option again to reverse the market. No, it will not work. Because I went back again to check this level. So you need to be observing everything. Don't place your trade blindly. Don't focus that the next level is here. Go back again and check. No need to draw. Most of the time, no need to draw levels, but just go back again and check. So immediately I went back, I checked. I saw the candle close there. So I want the candle to reject, then if I place put option. So I just placed put option. See a long distance, a late entry. But I still won the trade because of strong sellers at that area. So all my 6 trade was accomplished. Okay, perhaps.
Could you rewind a bit? I see some.
As you what?
Rewind a bit so that I see a bit again. Forward a bit. It's somewhere there. Yeah, that's okay. That's okay. Okay, now teacher, it's like I'm seeing an overlap of the buyer. You said the buyers are here.
Yes.
And here.
Yes.
And they also said that the sellers are here.
Yes.
And here.
Yes.
So that seems to be an overlap. I don't know how to treat that now.
This is previous sellers area. That is the resistance level here. They keep up its position again as the resistance level. So this is seller's area. Assuming that there's nothing like here, then you'll be considering this area as the buyer's area. So the next candle will be bullish. But here we still have some seller's area here, some turning points, strong sellers entry, rejection and sellers entry. Assuming that there's nothing here, then we can still consider this as buyer's area. Then we place call option on the next candle. But because of this rejection, so that's why the confirmation I saw in this candle was that because of the rejection. Assuming that this selling rejection, I will not go with sellers because there are some sellers here, but here there's no rejection. That means the sellers are not interested. But I saw very strong rejection. Then compare with this bearish candle, I knew that the sellers have dominated this area now. Have dominated this area. So with the rejection, then I place put. So assuming that there's no rejection, tell you the next candle here will be bullish. But that rejection already showed me that the buyers the sellers are still here, are still active here.
So do I consider this candle the close of this candle to be in a seller's area or in a buyer's area?
Yeah.
Because of the overlap, do I consider the close to be in a seller's area or in a buyer's area?
Which, this, you mean this candle?
The red one.
This one?
Yeah, do I consider it to have closed in a seller's area or in a buyer's area?
This level?
Yes, because it is inside both.
Yes, it's inside the box.
Inside both sellers and buyers area.
Both buyers and sellers area are inside the box now.
Yeah.
Both buyers and sellers are inside the box now. So this is seller's area. While this one is buyer's area. So they are now inside the box. But because this candle now show a sign that the buyers that are inside this box are weak. So that's why the next candle should be bearish. As if I show a sign that they are strong, like maybe a strong bullish candle or a Marbozu candle, the next candle here will be bullish. But it shows the rejection and weak body compared to previous bearish candle at this same seller's area. So the next candle here was bearish.
Okay.
So the box there, the sellers and buyers are now there. That's why I say there's no specific place for buyers and sellers area. They can stay on the same level, but you need to, if they stay on the same, if if they are found on the same area, you can place your trade, and if they are found on the same area, focus on the current candle, now place your trade. So that's how to deal with them. Okay, any more questions? Any more questions?
We really need practice.
Okay.
Exercise.
Okay. So concerning the question on WhatsApp, there's one thing I want to let you know about this middle of the trend or whatever. Let me show you on the start. Which one is that? Then when you want to trade, what do you mean by middle of the trend? Let me draw something like this.
Yes.
Middle of the trend means when you see a kind of situation like this, I think Java get to be here because I didn't see her. It's what I asked that question on the main group. You say what's the meaning of middle of the trend? You mean my sound? My sound is clear. Middle of the trend is when you see a kind of situation like this. If this is uptrend, you see the market going like this, like this, like this, like this, like this, like this, like this. All this level is middle of the trend. This level, middle of the trend. Again, if the market should come, this level, middle of the trend. Okay, no problem. All this level, middle of the trend, middle of the trend, middle of the trend. So all this level that you're seeing here is middle of the trend. Now, if a strong bullish candle appear here, or let's say something like a doji candlestick, what am I saying? Something like a spinning top candle, a spinning top candle. If a spinning top candle appear here, that means it appear in the middle of the trend, this middle of the trend. It means the next candle should continue a continuation sign from the middle of the trend, a reversal sign after sellers enter. So it will reverse the market in the middle of the trend at this level. It's the same thing that when sellers entered here, then you now saw a spinning top candle, a spinning top candle here. So a spinning top candle in the middle of the trend at the SNR level is a sign of reversal. Assuming that it forms somewhere here, a spinning top candle, it forms somewhere here. It's a continuation to this level. So the market now will reverse in the middle of the trend. So note that there's something that we usually look at it when we say in the middle of the trend. That is, the market reversed from the previous resistance, now becomes the support. And we now saw something like a spinning top. So it reversed from the middle of the trend. That is a spinning top in the middle of the trend. Not until something like this or like this, then you now saw a spinning top. If you continue, no, that's not what we mean by middle of the trend. Middle of the trend is that it comes from the middle of the trend. Either we say middle of the trend or we say come from the middle, but we see that to be easy for some traders, we make it to be middle of the trend. That is, it came from the middle of the trend. So middle of the trend usually see like the same thing on downtrend. When you have something like this, like this, like this, again, market went up like this. So this here, here, and here is the middle of the trend. And if you see any candle that formed there, if you see any candle that formed there, it's a continuation sign that is reversal from the middle of the trend. Reversal from the middle of the trend. Okay? That's what we mean by middle of the trend. Let's see that on the chart. Look at this chart now. Market went down here, buyers push up, went down again, buyers push up, went down again, buyers push up, went down again, buyers push up. All this area is the middle of the trend. This 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 is the starting of the trend, and this is the ending of the trend. So anyone that you see here, any candle, any continuation sign that you see here, after impulsive or retracement move. Retracement move is the candle that go against the trend. If you see a downtrend like this, all these trend are the retracement move. This one also retracement move, and this one also retracement move. Why this one is the impulsive move? Impulsive. Another way we call this move corrective move. Corrective move. Impulsive, corrective, impulsive, corrective, impulsive, corrective. It's just like breathing in, breathe out, breathe in, breathe out, breathe in, breathe out. So that's why we call it impulsive move or corrective move, or we call it a retracement move. Same thing is happening here. This is the starting of the trend, and the market is about to end here. So there's no area here which we expect the market to end. So any candle that forms there, a continuation sign in the middle of the trend, that's why we usually say it's in the middle of the trend. Here, middle of the trend, middle of the trend, middle of the trend, middle of the trend, end of the trend. Like here, for the buyers, corrective move, retracement move, corrective, retracement, corrective, retracement, corrective. So here, middle of the trend, start of the trend, starting of the trend, middle of the trend, middle of the trend, middle of the trend, middle of the trend. So if the market should reverse somewhere here, it's middle of the trend. It reverse somewhere here, middle of the trend, middle of the trend. So this is the starting of the trend. So we never know where will be the ending of the trend, except maybe to this extreme resistance. That will be the ending of the trend. So that's all about middle of the trend. So it's not we are coming. Let's see the questions. Okay, now the first question is the first question is weak. The first question is weak confusion or weak bias on support level, and the next candle will be red. Sometime. Okay. Any weak candle that appear maybe at the support level or at the resistance level that always reverse or continue the market. So don't be confused when you see such situation. If a market reverse like this, if you are seeing a downtrend move like this, and you are seeing a weak bias entry here. That is, after this weak bias, the next candle was still bullish. If you see something like this, check what happened to that trend before it reached that area. Check what happened to that trend. If anything happened to the trend, maybe the buyers are trying to enter here, trying to enter, but on reaching here, they now entered with a weak the network is just kicking me out. I don't know. Why is it so. So let me see if I can cover up the topic. Okay, can you hear me now?
Yes, sir.
Okay, no problem.
Yes.
Okay. So when you see a weak candle, let's say we are seeing a downtrend move. Okay, let's say we are seeing a downtrend move like this, and you saw a weak bias here. Let's say something like spinning top, this network. Okay, let's say something like spinning top, then the next candle was bullish. It is because something has already happened to the trend. Something has already happened to the momentum, to the trend or the momentum. That's why we are seeing here. But if you now saw something, a situation like this, and you now saw a bullish candle here that appeared here, then the next candle was red. That means something too has happened here on the trend before it reached this level. So I will explain to you that's what happened. Now look at this kind of situation where we have a weak bias entry here, but on reaching here, bias enter. Because something has already happened to the trend before you reach this level. Starting from here, look at this. This network of a thing, no problem. Starting from here and here, starting from this point here, this point, and it ended here. That is, all these weak bullish candles that you are seeing in the middle of the trend, it's because they are weak. They cannot withhold this seller's movement here. They cannot withhold this seller's movement. And there's no sign or strong rejection or strong sign of buyers dominating this momentum. There's no strong sign of buyers dominating this momentum. But this candle was a exhaustion candle, a strong candle. That's why we're seeing that buyers enter. There's no strong sign. Here we can see very small buyers entry, small buyers entry, small buyers entry, then small buyers. But because of this exhaustion candle, buyers entered. Buyers now entered, showing that they will not continue the market because the trend is downtrend 1, rejection from sellers 2, weak bullish candle 3, strong bearish candle like a bearish engulfing pattern, a continuation sign of this bearish downtrend. All this rejection you are seeing here, it is a doji candlestick on 5-second chart, or let's say a doji candlestick or a weak bullish candle, like very small, tiny body. But here, in this kind of situation, we have seen that the sellers are now more powerful than buyers here. Look at here. The trend was very strong downtrend, but here, the sellers are now more powerful. After that, after this trend started, the sellers, the buyers are entering in 3, 2, and 1. 3, 2, and 1. 3, 2, and 1. But the move, let's say the corrective move ended here. Now sellers entered very strongly. Buyers appear here. So the buyers will not continue here because the corrective move have ended here. So buyers will not form another bullish candle here. They try here, they fail. They try here, they fail. Now they try at the extreme support. This way, the extreme support. The extreme support is here. You can see the extreme support. Any support that you see after a breakout is the extreme support. This is the extreme support after this breakout. Then you now keep the position as a support level. So any support level that you see after a breakout is extreme support. So now buyers now enter into, then buyers now form its own movement here. Again, sellers again enter, maybe at the extreme resistance here. Sellers again entered into. You can see there we have strong buyers entry, then we have weak sellers. Now look at this candle that formed, the closing candle that formed here is weak compared to previous bearish candle. And look at the trend. If you observe the trend that the sellers already are trying to enter the market, you can see this strong rejection, rejection on both upper and lower side, rejection on both upper and lower side, strong rejection, rejection on both upper and lower. That means the sellers are already try on this candle. Now the candle, the buyers now show weakness, maybe at the strong resistance level. Buyers show weakness, then sellers enter. Sellers entered with new low. That's why the next candle was bearish. So the buyers cannot stop the sellers to form a bearish candle, a bullish candle here, a bearish candle. The power of buyers will not stop the sellers to form this will not form a bullish candle here. You can see there's no upper wick telling you that the sign of sellers now active at the market at the resistance level is this candle here and this weak bullish candle. So now the sellers enter very strongly, not even thinking twice to form a bullish candle. That's why there is no upper rejection here. So sellers entered again continuously. That is what is happening. So once you see something like this, a weak candle at the resistance level or support level, try to check the momentum. If the momentum is strong, or if the momentum has some disturbances, if the momentum has some disturbances from sellers, then you should know that if any strong sign of reversal should happen, this is a hammer candlestick, a red hammer candlestick, after a doji or a weak bias entry. So a red hammer candlestick, if any strong sign of reversal happen, you should know that the sellers are ready to enter the market. But assuming that there's no strong sign of sellers here with this rejection, maybe a strong bullish candle without strong rejection, and you now saw this candle here, the next candle will be bullish. That means buyers are ready to buy the market. So that's why we can do reverse the market and also continue the trend. Let me show you another example. Now look at this. Strong seller's entry. But here, a strong seller's entry. Instead of let's say hammer candlestick, because here we can see there's rejection here, rejection, and a Magozu candle. That is a sign of reversal. Rejection, strong rejection. There's some rejection here. Here again, strong rejection is sign of reversal. So here, and here, the buyers already show signs that they want to enter the market. Now the buyers now show up at the spinning top at the support level. So buyers entered on the next candle. Assuming that it show up as a strong candle like this, sellers will just continue their momentum. They will not even mind this strong bullish candle. They will continue their momentum. But buyers show their humbleness. Buyers show their humbleness as a reversal candlestick after this one, as a reversal candlestick to form a bullish candle. But the bullish candle here is now a strong sign with a strong rejection that the power of sellers here are now rejecting this candle. So sellers entered. Sellers entered again, sellers entered. We got it, buyers entered. So when you are following the market like this, you will have some good reading ratio. If you follow the market step, reason or movement within, let's say within 5 minutes, you can predict at least 5 minutes, 5 candles here. You see that reversal candlestick, buyers enter. Strong sellers entry, rejection, sellers enter. Sellers enter, strong rejection from sellers. The next level is here, sellers enter. Now the sellers cannot continue to this level because of weak body and a buyer's movement. Let me show you one by one. Let me show you one by one how you can predict candles here. Downtrend, reversal candlestick at the support level, and here also reversal candlestick, buyers enter. Rejection from sellers, bullish movement, sellers enter. Sellers enter, rejection from sellers, rejection from buyers is not enough. Then the next buyer's entry point is here, sellers enter. Sellers entered a weak body, cannot continue the seller's entry here because of this buyer's movement here. The buyer's movement here make this candle as a weak candle. The buyers entered. Buyers entered because of this seller's area. This seller's area. So now sellers entered. You can see the opening price is at the seller's area. So sellers entered. So now you should now stop trading because you already accomplished 5 trades here or 4 candles here. So when you are trading like this, you'll be understanding what the market is doing. You'll be following the market movement when you are trading like this. That is the way I learn how to trade with candlestick psychology. I'll just be following the market one after the other. Strong sellers entry, reversal candlestick, buyers enter. Then I now look at this candle. Rejection from buyers, from sellers because of these bearish forces. Sellers enter. Strong rejection from sellers, telling you that there are some strong sellers here with a very small rejection from buyers. With the next buyer's entry point is here. Sellers entered again. Sellers entered because the next point is here, and this rejection plus this bearish movement, the sellers entered. But a weak sellers. When I saw these weak sellers, I will consider this buyer's movement here. So the power of buyer's movement here now forced this now make this weak bearish candle close as a weak body, the buyer center. Buyer center, it closed at the seller's area. You can see now the market is consolidating. It closed at the seller's area. This is seller's area here. It closed at the seller's area, seller center. The opening price still at the seller's area, seller center. This is buyer's area because already we can see a minor uptrend here. Rejection from buyer center. Buyer center, it didn't close at the seller's area because the seller's area is here and here and here. This upper level here, buyer center. Buyer center closed at the seller's area with a rejection, seller center. Seller center closed at the buyer's area here. This one, this bearish candle, and buyer's entry, this rejection from buyers. It closed exactly at that level, buyer center. Buyer center, because of this area, this seller's area, the seller center. Now sellers enter continuously. The next level is here. Sellers, in this kind of situation, you should now know that the market now started going down. You should not just focus on the support level and the resistance level again. You should know that the market starts going down because already we can see strong sellers. That's why I say if market try first time and fail, try the second time and fail, the third time you should consider the third time how it falls. If the third candle is different from the other candles, then you should know what will be the next candle. You can see there's a new low here. The market possibly make a new low below the previous low. This low here, there's no low, and there's a low here, but not enough low. But here, create a new low because the major trend here is still downtrend. That's why the next candle here was bearish. So there are some buyers here. Where this candle closed, if you trace it back, you can see that it closed at the buyer's area. The buyer's area here. There are some buyers here. That's why you are seeing this upper wick here, but not enough buyer's entry. Next candle was bearish. Continue like that, bearish. Continue like that to reach the extreme of the buyer's enter. Okay. Any question? Any question?
Hello, sir. I have questions, sir.
Okay, no problem.
Hello? I have question.
Okay, no problem.
How do we draw this? I can see consolidation area in this place.
Okay. Okay, you want to draw buyers and sellers area?
The way we did it the other time.
Okay. Starting from here. This area is from here to here is seller's area. Now from here from here to here is buyer's area. This area,
okay,
this upper side, from here to here is seller's area. Then from here to here is buyer's area. You can see this candle which they close at the buyer's area with a rejection. That's why some buyers try to show up here on this week. But you should know that it's different from other candles because no low here, but there's a low telling you that the movement has changed. The market has already changed its movement. Now the market is thinking something else. So the market has now changed its move. So you should notice that. Assuming that you can just place 4 trades here, you can just take 4 trades, then get out of the market. No need of going further again and visit more candles. You just take 4 trades here, get out of the market, then wait for the next candle or the next hours or minutes before you place your trade again. The market changed its move by differentiating this candle from other candles with this low. That's why you're seeing sellers entry very strongly. Buyers are there, but no enough buyers here. That's why you're seeing this upper, very small upper rejection this upper rejection, this very small upper rejection, telling that the buyers are there, but no enough buyers. So that's why sellers enter very strong. So immediately that if you place call option here and you lost this trade, you should not place call option again. You should know that the buyers are not interested in this candle. So just place put option once you see something like this. But I don't advise you, once you notice that the consolidation has already started, if you want to be trading like that, you should just take at least 4 or 5 candles and 4 or 5 trades, then get out the market and leave the rest. And come back in the next few hours or few minutes. Okay?
Yes. Why this candle? It closed at sellers areas, but we have buyers entry.
Yeah. This bullish candle.
Yes.
This candle.
Yes, sir.
And the same price is still at the buyers, it's still at the body of the candle. If it didn't close at the buyers area, check it very well.
Sellers, I'm talking about sellers area.
Yes, it didn't close at the sellers area. The sellers area is here. The sellers area is here. You cannot count this at the sellers because this is not the turning point of the candle. This is the turning point, the first entry of sellers entry. The second one was here. So the bullish candle that changed to sellers entry is now the sellers area. It's now the sellers area. It didn't close. It closed and see the candles open here on the same level. Assuming that it went up a little bit. Let's say a gap, and the opening price went up a little bit, and there's a gap. I will just place put option, but it's still at the same level. There's no gap there. It's still at the same level. So on this kind of situation, if you wait, or either you take risk and place your trade, you can see that the seller tried to enter because of this rejection. The seller tried to, but the sellers will not enter because there's still it's still close at the closing price of this candle. The opening price is still on the same level. Assuming that he jump up and open here, the sellers will enter. So he now close open at the same level, buyers enter. Then close at the sellers area, sellers enter. You can see the same thing happening here. If the opening price is here, buyers will enter. But the opening price is at the sellers area. That's why sellers enter. So if you observe the gap, the little gap. Okay, any more questions?
Teacher, could you zoom in a bit?
Okay. Is it on this level?
Yeah, yeah. Initially, yeah, there. Initially, I saw you draw the buyer's area to, just a moment, on this candle. Sorry. Initially, I saw you put a line here, but I thought it should be on this candle, on this level here.
Okay, here, I mean this one.
Yeah, you had put it there.
Yeah, it can also be here too.
I thought it should be somewhere here. Yes.
Yeah, it can also be here or here, anyone.
Okay.
Either here or here, anyone. You will just observe the candles that close at that level.
Thank you.
You can see that when I put the line here, it's working here for this buyer's entry. But if I change it to this level, it's still working here for this buyer's entry, but no enough buyers. Sellers enter. Once I saw that this sellers entered, maybe I lost this one trade. Once I saw that the sellers entered, I will now know that the next candle should be finished. Because here there's no sign of buyers in this candle. No sign that the buyers will enter or no bullish candle. So the next candle here will be finished. So at this kind of situation, don't take trade here and don't take much trade on consolidation area. The market can change its move. That's why we always say don't trade on consolidation area, because if you are trading on consolidation area and you are winning, and you're having some winning trade, you might be trying to take some trade, but you don't know where the market will change its move. So you not observe that. That's why you always want traders not to take trade on consolidation and instead choose a friendly market like this. The impulsive, corrective, or SNR levels. Now, how to draw SNR levels? There's one thing I want to show you, the way I draw SNR levels. That's why I master how to draw SNR levels. When I master how to draw SNR levels, I don't need to check or by drawing again. Once I look at it on the left side, I will know what I'm doing. The way I draw buyers and sellers area, if you notice on the second video, I think the second video, I show something about something like this and this and this. Let's say this is a bullish candle, and this is a that is I draw my line here, and I draw my line. So I choose this as the SR level, that is the buyers and sellers area. The sellers will come to this level and close with a rejection, buyers enter. If buyers will come to this level and close with a rejection, sellers enter. So I want to show you that on the chart, how to draw that level properly. Let's say this is A. Let's say this bullish candle is here. I never know what will be the next candle here. So, and I want to draw an area here just to catch up the seller's entry here. The first thing I do, the first thing I do is I will go on the left side. I will check something like this. I'll place my line here. I place my line here. If I want to draw an area, if I want to use this one, I can use this one line. But I want to draw an area. That's why support and resistance is an area, not drawing one point, not with one line. It is an area. That is one thing that traders don't know. Support and resistance level is an area. So I will show you why that this bearish candle formed. The next one was bearish because of the area. I will show you. So now I have drawn the first line here. Then I'll now go back again and look for the next turning point. Next turning point is here. Market reverse here. The market also reverse here, reverse here, reverse here. So this is a seller's area. So I think the next candle here will be bearish. You can see the next candle here was bearish. The next candle here was bearish because it closed at that level with a rejection. And if you go back again on the left side, you choose another chart. If you go back now, look at this candle. Look at this bearish and bullish candle here that is forming. I want to draw an area just to stop there from forming a bullish candle on the next candle. I want to find an area. I will just look at this area. This is the area I will look at it. I will look at this here, 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 here. I will look at this. I can go further and check. Then if I want to start drawing my area, I will start drawing my area like this. This and this. This lowest point. This lowest point here. and the opening price of this candle here and the closing price. That is the level. And if you look at the level, once I place my line here, I check if it touch as many levels. As many levels, you touch here. Then the second line I place here, I will see maybe touch as many levels. Yes, it touch here, here, this one, and this one also. So this area I have drawn, if the candle was bullish and it closed at that level, the next candle should be bearish. So that area I have drawn is a seller's area. You can see it cross it, but this is a Marbozu candle. So a sign of reversal. Let me show you one thing. Let me tell you one thing. Whenever you draw your area, when you draw your area and you saw a Marbozu candle, take note. If you saw a Marbozu candle that closed at that area, above the area, then the next candle should be bearish. The next candle will be bearish. A Marbozu candle that closed above the seller's area, the next candle. But if this candle is not a Marbozu candle, the next candle will be bullish. And if it close in this area, the next candle will be bearish. The next candle will be bearish. So you should take note of that. A Marbozu candle that closed above the seller's area without a strong backup, let's say if the major trend is downtrend and a Marbozu candle closed above the seller's area when you have drawn the area, then the next candle should be bearish. So you should consider this as a minor uptrend, but the market will continue after a retracement. So there must be a retracement because this area that I have drawn is a strong seller's area, a strong reversal area. That area that I've drawn, the buyers are there and the sellers are there. I will show you how the buyers and sellers are in that area. So that's why I draw the line. So support and resistance is not only for support, it's not only for buyers area, and it's not only for sellers area. I will show you why this area that I've drawn, buyers and sellers are there. Look at this. This is a support level. Buyers enter. So if market should reach this level, sellers should enter. This is a extreme support level. Buyers enter. So if sellers should come to this level, buyers should enter. So here, sellers entered. Here, buyers entered. Buyers entered. Sellers entered. So this whole area is a reversal area. So if buyers should come to this level, sellers enter. If sellers should come to this level, buyers enter. So it's a reversal area. So it happens most of the time when you are seeing a candle in the middle of the trend, strong bullish movement like this, and it happened like that. That is, after the candle closed, maybe at that strong reversal area, the next candle was this. As if now the close above the area, the next candle should be bearish. So it happens most of the time like that. So here, the buyers are there, buyers are there, and here the buyers are there, the sellers are there. That's why that place is used as buyers and sellers area. So a support and resistance level is not only for buyers area alone or sellers area alone, it's for both of them. That's why we use two lines. But if I only want to catch up the sellers area, I will just use one line. And here, the price is here. So let's look for the reversal point here. We have a reversal point, the buyer's entry here. Then I will go on the left side to look for the seller's entry to catch up if the market will reverse in the two ways. Okay, it didn't show. So assuming this three markets, I would have shown you that, but there's no other level again. So no other level. Here, if you want to draw your area here, your area, this is a ranging market, and if you want to draw your area here as the buyers and sellers area, if you want to draw this area, if you want to draw this area as the sellers area, as the buyers area, so not all the time you'll be drawing levels or drawing support and resistance of buyers area on your chart. Fancy your chart. Look at the left side. Check how the candle is behaving at that level. Then focus on the light candle. Although if you have some experience, you can trade like that. That's how I do because I have some experience. But if you still find it difficult to trade like this, you can use this. That is, if you want to draw seller's area here, your seller's area should be somewhere here. The highest point here. The highest point. And for buyers, this is a fake move, not a real move. For buyers, you choose this. Because of this coronavirus, this COVID-19. Because of this COVID-19, is really affecting the market. Even it's affecting noticing market. I just observed that. This move that you're seeing here is a fake move. In Forex, so many people have paid sell here, that thinking the market will continue, but what happened? The market is so it's a fake move. This is the real level here. So the market is really affected by all this. Okay. Now we have set our buyers, sellers area here, buyers area here. Now let's the seller's entry, buyer's entry. Now let's draw the area. You have choose this one. Now draw your area here. Your area is here. You have choose this one. Draw your area. Your area is here. So the seller's area is here. The buyer's area is here. So you have now drawn your area. So if any candle should be bouncing on this area, they close here. Maybe you should wait. If the candle will close here, you place put a call option. And if you wait, if the candle will close here with a rejection, you place put. But here it's closed without rejection. And this is minor uptrend. So it means the market will continue going up. So sellers will show some signs that they are present in the market. So assuming that they show sign, a strong sign that is forming a bearish candle here after this Mangozu, the next candle here will be bearish. But here, this candle already shows sign that there's no enough buyers. No enough buyers, you can only see some buyers entry here, this lower rejection. No enough buyers at this area, but they are present. That's why you're seeing this lower rejection. But they cannot form a bearish candle. So the next candle here will be bullish. So this is also a strategy. If you see a resistance level or a seller's area, and the next candle here didn't form bearish candle at the seller's area, then you place call option on the next candle because the sellers are not interested here to form a bearish candle. So the next candle here will be bearish. But if this one has a rejection and it's closed here, it's closed at that seller's area, the next candle here will be bearish, but no rejection, and this is minor uptrend. So the next candle here was bullish. That's why I say always follow the trend. So don't focus mostly on the ranging market. Follow the trend. You can see the trend here is uptrend. So follow this trend. Once you follow this trend and you observe that the market didn't respect this level, you place for. Some of you now place put option because you say the trend is downtrend, seller's area, the Mangozu candle, the reversal candle, which is not right. This is the minor trend. As I say, let any trend you want to follow, let 80% be the minor trend. So just focus on the minor trend and look at the level and look closely at what happened to the candle before you place your call, before you place your trade. here I have the possibility that here we have minor uptrend, a bullish engulfing pattern, buying pressure. Those are the sellers area without rejection from sellers. So the next candle was bullish. But for sellers downtrend, I think downtrend, those are the sellers area. Downtrend, those are the sellers area. That is for put option. But here, minor uptrend, bullish engulfing, no upper rejection, strong bullish candle with buying pressure here, the next candle. But here, when I now consider that I want this trade, which is supposed to be bearish, I now know that the next candle will be bullish. So that's the way I think, the way I reason about the market is that if I should place a trade, and maybe I'm not confident on that trade, and I want that trade, I should know that instead of that, the market too is thinking of that way. That means the market also is thinking if it's going to reverse, if the sellers will enter very strongly, but the sellers didn't enter. So the next candle was bullish. So I should know that the next candle after this bullish candle should be bullish. So the market too is thinking that way. No strong sellers here. No enough sellers here to form a bearish candle. Instead of buyers movement, strong buyers, a confirmation of bullish engulfing. That's why the next candle here was bullish. This is the confirmation that there's no enough buyers here, and a confirmation of bullish engulfing to continue this trend. That's why the next candle was bullish. And this is now consider it as a junction candle. Don't say this is a strong candle to continue going up. Once you place call option here and you saw this extraction candle, you should be reading the candles one by one. Don't say because you have bullish momentum that you should place call option. Not that way. You'll be reading the market one candle. What happened? The first one that happened here is that no enough buyers, no enough sellers here. Buyers enter. Confirmation that the sellers are not here. The sellers enter. Now look at this candle, extraction candle. So sellers will enter. So you should not be saying this is minor bullish trend. You want to place call option on the next candle. No. Just reason what happened to the first candle before you place your trade. Before you place your trade, that is what I do. That is what I always do before I place my trade. I will first reason what happened at this area. Why is it that there's no seller's entry? Then when I reason that there's no seller's entry, I will now reason why this candle formed here. So I'm reasoning every candle one by one. Then if I now saw this one, I notice a reversal candle, the extraction candle. Maybe there's a resistance level here. Sellers enter. This is bearish around me. Sellers enter again because of major downtrend. And the sellers are here, but no sign of sellers. Rejection, explosion candle. Sellers enter. So you should not be reasoning like seeing this momentum, then you want to place call option. Maybe you just open your chart, you saw this momentum, you want to first reason what happened previously to all those candles before you reach here. Once you reason that the candles before you reach here, you should know that maybe there's a resistance level, next candle should be bearish. So that's how to trade professionally. Don't trade when you see strong bearish candles. No, don't trade like that. First reason what happened to those candles before you reach this level. Like now, if I want to predict, if I want to know the reason after this candle why the next candle here was bearish, number one is that if I want to reason, I'll first start from here. We are seeing a downtrend, a mariposa candle, buyers enter. Buyers entered, strong buyers entry. The next level is here. Next candle. It didn't close at the level, so the opening price is still at the buyers area, and the opening price is not at the buyers area. Buyers enter. The next level is here. It crossed this level, and the next level is here. Buyers enter. Buyers entered again. I look at the momentum is very strong, buyers enter again. Buyers enter with a rejection, so I will not go with sellers because the momentum is still strong. Buyers enter again. Now a weak buyers at this sellers area. A weak buyers at this sellers area. Now I will now consider the sellers entry. A weak sellers again because here we can see strong sellers, but here a weak sellers. Buyers enter, buyers continue. So that's how you reason how the market is moving. You can choose 5-minute candlestick. If you choose 5-minute candlestick and you practice that all the time, you can now be 2 minutes or 1 minute. So this is how I started when I first learned how to predict candles. Let's check the first one. That's why most of the time when you see me before I place trade, most of the time, if you check my videos on YouTube, before I place any trade, I will just place my trade. If maybe I just want to predict what will be the next candle here, I'll just go back again and place my line here. I will just be thinking that one by one, step by step. I will draw an area. I will not quickly go and find an area here just to say continuation, no. Or area here to say sellers area, no. That's not what I do. I will first draw my area where this candle started. Then I will not be reading one by one, one by one, one by one. When the market approaches this level, I will not know what will be next. So these are the steps I do. These are the steps you take before you predict momentum or next candle. Don't just say this is bullish momentum and you want to do the buyers continuously. No, say that. And don't just say this is bearish momentum, a weak bias, then you want to place colors. No, don't say that. Consider first thing, why this bearish candle formed here. First reason. First reason why this bearish candle formed here, why sellers entered here. Go back on the left side, why they entered from this level. And check what happened to this candle, why sellers entered, and why this candle entered, and why this one, why this one. So when you now reach here, you should know that this is a reversal candlestick, so buyers entered. Buyers entered with a new high, buyers entered again. A reversal candlestick and bearish downtrend, sellers entered. So you should be reading the market like that. Don't think downtrend or bearish momentum, then you want to place put option for it. If the market is moving like what people think, everybody will have been a millionaire now.
Yeah.
Because if you follow the market, what market is doing. So that's why I say observe the market movement. Don't observe the whole movement. So if everybody should be placing put option in this kind of situation, everybody will have been a millionaire now. Not even a small child. Once you saw this kind of candlestick or pattern, you should just be placing put option. So you need to visit before you place your trade. And here, this is the previous resistance. What happened here? He broke the level, the buyer center. Buyer center become weak when rejected from this level. Seller center. Seller center, new low, bearish engulfing, minor downtrend, seller center again. A reversal candlestick, Marbozu from this level, strong buyer's entry here from this level, standing buyer center. This candle close at the buyer's area, not seller's area here. So buyer center. Buyer center, the next seller's area is here. Only rejection from sellers, which is this rejection here, and this is not position buyer's closing. Buyer center, but cross this level. The next possible reversal is here. Strong bullish candle in the middle of the trend. Next candle was bearish candle, bullish candle. Buyer center. Buyer center, this rejection was here. That rejection was here, but not here. It didn't close at the level. And because of this momentum, buyer will form a bullish candle. Buyer center. Buyer center, the case with a weak body. Consider this trend. With weak body, seller center. Seller center again with a weak body because here we have strong seller entry and downtrend here, no enough sellers. Because of this momentum, buyers Bias continue. Bias continue. Continue again. Consolidate or because consolidate for a while, being for a seller enter very strong. Okay. So that's how you can reason how to take it. Okay. Any more questions? Yes.
No,
Yes.
that's a bullish candle that you said is extortion candle.
Yes.
How do I identify it again? Because me looking at it, because of the buying pressure under, I would think it's a strong candle.
Yeah.
Yes,
Long
yes.
candle.
But,
Continue, continue.
but you said it's an exhaustion candle. In case of next time, how do I note it?
You should note it when you start analyzing from the starting of the momentum. You should know that assuming that it is this one that formed here, the next time will be bullish because you can see that our analysis has already told us that starting from here, the buyers break this level, buyers entered. Because this is a strong candle, when buyers entered again, buyers entered. Now we should consider analyzing this candle. If you consider analyzing this candle, this is exhaustion candle from this level. Sellers enter very strongly. And there's a level here. If you check on the left side, there's a support level. Okay, this okay. So here, the sellers entered very strongly. So this is an exhaustion candle, a long bullish candle, close at the key level. At the key level, this is the key level. Support that is support level that became resistance level. Support level that became resistance, the key level. So now this candle closed at the level. So sellers entered. So this is a short-term candle at the key level. So when you start analyzing, don't focus on the current candle. Focus, let your analysis start from here. What happened here? Why this candle formed here? So if we start from 5-second chart, candlestick, and you do this, you can master 2 minutes. Sorry, if you start from 5 minutes candlestick, and you do that, you can master 2 minutes. Then from 2 minutes to 1 minute. That's how I started. So for 1 minute now, when you master it fully, you can start trading, or you can start full analysis. So this is a Johnson candle at the close at the key level, exactly at the key level, and the opening price of this bearish candle is at the key level, not weak candle like this, not weak candle like this. That's why the next candle was bearish, because there's no upper rejection. Buyers are not interested here. So at the key level, a strong candle at the key level. That's why the sellers enter. Assuming that it is weak candle at here, buyers will continue their move. But a strong candle at the key level, that's why buyers enter and sellers enter. Now they start consolidating. And this area, you can see the candle cross it here with a rejection. Buyers entered. So buyers enter for 1 minute, then sellers enter again. Because this area has been crossed by buyers, which is that buyers are dominating the level, and this candle cross that level, buyers enter. So it's now a turning point for buyers and sellers. Turning point for buyers and sellers. Reverse here, reverse here, reverse here, reverse, rejection is reverse, touch the body, it reverse. This also is reverse, but here it didn't reverse because the consolidation, the ranging area has ended here. And if you look at the candles that close, they are not the same at the level that the candle that close on those levels. A spinning top candle after bearish move. There's no spinning top here. There's no spinning top here at this line here. There's no spinning top. So a spinning top, continuation of this bearish movement, next candle was this. Okay, let me choose another level, another pair. This is uptrend. This is uptrend. So in uptrend market like this, you don't focus on ranging buyers and sellers area like this. Why is everybody getting out and coming in? At least the network that is kicking you guys out. In uptrend like this, you don't focus on one turning point, but focus on more than two turning points. Yes, we have more than two turning points, which is sellers area that are here. But in uptrend like this, you don't focus on one turning point. So if buyers will come to that level with a rejection, sellers will enter. Okay, no problem. Like now, this is uptrend, and you see rejection, a strong bullish candle. Those are that level at the sellers area, sellers enter. So assuming that it is only one turning point, something like this, assuming that it is only one turning point, which all these are not there, and the trend is uptrend. The next candle here will be bullish because the trend is uptrend. So the market will not move like this. So here we have more than turning points here. We have 1, and we have 2, we have 3. So we use this as a seller's area. And sellers area. So this candle close at the sellers area, buyers enter. The sellers enter. But assuming that we only have one turning point here, let's say only this turning point. When all these are not there, then sellers will continue, because if you draw your trend line, the market will likely to choose another level for sellers to enter, not this level. But because there are so many levels and so many sellers entry here, that's why sellers enter here.
Teacher.
Okay.
Could I attempt to draw the area here for the seller's entry?
For the seller's area?
Yeah, could I attempt? Will I be right to draw from here? Sorry. From this candle?
Yes.
To here? To here?
Yes, that is seller's area.
Okay.
From here to here, seller's area. From here to seller's area. You can see this candle will get from that level. So you should not count this as a next candle period. If you get from that level, the seller's area that are here, if you get and it's close here, you can see there's a gap. Now this bullish candle close at that level, so sellers enter. Okay. So that's how to draw buyers and sellers area. Sellers area, the buyers too are here. You can see this doji, this Mangosu candle close at that area without even rejection, but because there are some strong rejections and sellers entry, strong turning point, that's why the next candle was closed. And this is strong option. Now, if you see something like this, if you see something like this, we only have one turning point here. So you should not consider this as seller's area because you only have one turning point. You can see the candle close at that level. It's even small rejection. What happens the next candle? Because the trend is uptrend. So the market is moving like this. The market is moving like this. The market is moving like this, not horizontally, but trend. But assuming that we have some other turning points here, then you cannot choose that as seller's area. So if this bullish candle close at that level, sellers will enter. But only one turning point. You can't trust this level. So we should find another trend line, another market to continue because this is uptrend. To find another move just to connect with this to find our next seller's entry. And this candle close above it, and then a weak candle after the breakout, sellers enter. You can see it keeps the position as seller's entry here, and it keeps the position again as seller's entry, and again as seller's buyer's entry here, and again as seller's entry. So the way I'm looking at it, I'm looking at it not until I draw the line to touch the level. I can look from far distance to connect. If I want to connect level here from here to here, I will have know what I will do. So I can just connect it like this. So once I see that this candle is close above this level and I zoom out, I saw it, then no need for me to be placing my line here. Once I saw it, that's the way I trade professionally. Once I saw it, no need for me to place my line here. I'll just know that connecting from here to here, that means the seller will enter here. Okay, 5-second confirmation. 5-second confirmation. Those of you that the network is kicking you out, just accept it like that. I think it's coronavirus that is causing the network. Instead, they managed to kick me, but that I've changed it to another network. Okay. Now, confirmation of buyers and confirmation of 5-second chart. This is NZUSD, so I want to change it to NZUSD of 5 seconds. This is 5 seconds, and this is 1 minute. You can see both the 5 seconds and 1 minute, they have the same trend. Uptrend here, uptrend here. We can see seller's entry here. That's why I'm seeing this, all these seller's entry. We can see some buyer's entry here, doji candlestick. That's why I see some strong seller's entry. Now look at this. You can see buyers is forming here. That's why I see some bullish candle here. A strong buyer's entry here. You can see starting from here. You can see starting from here, buyers are entering the market. You can see buyers are becoming more powerful. You can look at the candle from here, but now they become weak. Sellers entered. Sellers entered, that is the rejection here. Look at this rejection. Look at the rejection here. You can see the sellers are here. So the sellers are here on this rejection. And look at it. The candle reached that level and become weak. The sellers are here previously and become weak. So the body is different from other candles. So buyers are becoming more powerful here. Becoming more powerful. But here, on reaching this level, they become weak. And that's what we are seeing here. You can see the rejection. These two sellers that we are seeing here is this rejection from this level. Buyers that you are seeing here is the disturbance from buyers entry on this bearish candle. We can see buyers are entering. That's the rejection we are seeing here. Bearish candle that we are seeing that the candle goes below that rejection. You can see buyers entry with buying pressure. That is the rejection we are seeing here. Buyers entered again with this gap up. That is the strong rejection we are seeing here. You can see strong bullish candle here. That is the rejection or the buying pressure that you are seeing here. Now at this level, sellers entered. That is the small rejection we are seeing here. Sellers entered again. That is the sellers entry that we are seeing here. This rejection from buyers, this disturbance from buyers is this bullish candle that we are seeing here. A weak candle, after a weak candle, strong sellers entry, is that the sellers close below that rejection. A gap up, that is, the buyers had changed their entry from here to here. Buyers change their entry from here to here. That's why we are seeing this gap up. This is the rejection here. A strong bullish candle, that's why you're seeing this buying pressure. There's a way, when you draw your area, if you draw your area and you draw your support and resistance, let's say buyers and sellers area, check the behavior on those candles at that area. You can confirm that if you can observe that on 1 minute, go to 5 seconds and check. Once you draw your area, go to 5 seconds and check. If you see a strong candle on that area, you should know that it's a strong rejection from sellers on those areas, maybe at the sellers area. If you see a strong rejection from buyers, you should know that it is a strong rejection, a buyer's entry from that support level. So that's how you can confirm that on 5-second chart. Then if you want to be trading 5 minutes, on 5-minute chart, you use 1 minute. On 5-minute candlestick, you use 1 minute. You can see some buyer's entry. That's why I see buyer's entry. Either you use 1 minute or 30 seconds. To be on the safer side, the safe side, use 30 seconds. Strong buyer's entry, but on 5 minutes, we are seeing buyer's entry. The sellers that are here, if you see any rejection from that level on 5 seconds, on 5 minutes, then you should know that sellers are entered. The strong candle, now you see some bullish candle here, you should know that there's no enough rejection from sellers. But if you continue seeing rejection or sellers and the sellers entry, you should know that now the sellers are entering the market. So on 1 minute, you use 5 seconds. On 2 minutes, you use 15 seconds or 10 seconds. Then on 5 minutes, you use 15 seconds or 30 seconds or 1 minute. So another see trader using 10 minutes. That's a long distance. That's a long way. And that person is too lazy using 10 minutes or 15 minutes. Since I start trading, I don't use 10 minutes. I don't use 15 minutes. I only use 5 minutes. Some will even use 1 minute. Let's see the 1 minute. 1 month. Some will use 1 month. You can see before you can predict 1 month. It's just like headache. To me, it's like headache. Because 1 month I can't be able to zoom all the charts. You can see I can't zoom out the chart. This is where the chart stops. That means all the candles will form at least 1 month. But all this time frame is for the lazy people. Starting from 10 to here for the lazy people. So 5 minutes is still okay. 2 minutes is still okay. 1 minute is still okay. So price action is the best strategy that we can use that can apply to trade. Price action strategy. Yes. If you know price action, then you can trade the company. Now,
Hello, sir.
Concerning the week.
Hello, sir.
Yes.
You mentioned in the group that price action is how the candles behave at external level.
Yes.
So,
no,
and we should watch the candle in motion.
Price action is the reaction
price action
on external levels or channel.
Okay.
Yes. Why candlestick psychology is the behavior of that price on that level. Like now, this is a support level. If you are trading with price action, you are trading like this by drawing your line here. By drawing your line, that is price action. Your analysis, drawing your line here. That's your analysis. Then When you want to take your trade, you focus on candlestick psychology, which is the behavior of that candlestick on this level. Price action is the reaction of prices on this level. That is, the candle closed here. It didn't close below. It closed at the support level. It didn't close above. It closed here. That is the reaction of this price here. But the behavior, what happened to this candlestick before it reached here? Rejection. We got some disturbances from buyers. So buyers enter. So it's just the same thing. Let me call it a tautology. Whatever you are saying the same, but don't be confused. They are the same. They are the same. Don't be confused. They are the same. Is the reaction of price at the candlestick psychology is the behavior of the price. So it's the best strategy that you can use. We have so many indicators here. By the time I start trading, the indicator I always use Bollinger Band. Bollinger Band too is a very good indicator. Bollinger Band, and I use five 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 period division too. So this is how I use Bollinger Band. So once the way I started, that is what led me to know how to with candlestick. If you look at if you look at this Bollinger Band, here, this is what I do. This is one strategy about Bollinger Band. This is, you can see that the candle, so the line here, it went up, then it's now going down. Same thing happened here, it's going down. Or same thing here, the line here is trying to fluctuate. Like let's say it's trying to fall uptrend, something like uptrend. So once I see this, that is, I will go with 2 against 1. If this one is like this, the second one too is like this, and the third one is like this, I will go with this one. You can see here we have a cup, downtrend cup. This one we have a cup downtrend. But if you look closely, this one is like forming uptrend cup, but the direction is still down. But if you look closely, it's like forming a V shape. Look at it very well. It's like forming a V shape. Though it's straight, it's not the same thing. It's straight. It's like forming a V shape. You can see. So I will now go with this one, these two against one. But this strategy doesn't work 100%. At least 70% it works. 70%. So that is how I learned how to know how to identify strong rejection and candle movement for behavior. So that is how I learned. You can see this one went down, but this one is trying to go up. So I will go with this 2 against 1. And it works most of the time on OTC market and real market. Okay, like this way you can place your trade. You can see that the market starts going down because of this 2 against 1. Why this one is 1, this one is 2. So that's how you can place your trade with Bollinger Band and something else. So that's all about candlestick psychology and buyers and sellers area. We have so many indicators. And not only Bollinger Band I use moving average, and I use CCI. I use polygon band, I use moving average, and I use CCI. Those are the three indicators I use. So there are so many indicators. The red indicators, they are just fancy indicators. They will fancy your chart. So I don't use so many indicators. Use few indicators. So you too can try that. You can try any of these indicators like moving average, polygon band, or CPI indicator. But if you focus on the candle, so I can assure you that it will give you 70%. Okay, the setting for CPI is this. The setting for CCI it is I use 70. I use 70. I use no, not 70. I use 50, 55. I use 55. Then the overbought I use 100. Most of the time I use below 100, like 80, 70, but I use 100. Most of the time, I use 100. So you can use it like this. The market is overbought all the time. Now it's trying to be oversold. You can see the market is uptrend most of the time. If you see the CCI leaping on the upper line, it's a sign that the market is uptrend all the time. But if you see a strong move like this, it's trying to leap on the lower line. That means it's trying to move downtrend at this time. So it's a strong signal for sellers, for forex trader to sell the market at this time. You can see here the same thing from here to here. You can see it start flipping on this line, telling you that the market is downtrend. But now it start flipping on the upper line, telling you that the market is uptrend. So once you see a leap, it's a leaping on the upper line, you should know that this is uptrend. It's heading to the downside. You should know that the market is going down. So you can use so many indicators, but these are the indicators I use. I use moving average. I use moving average too. 50 moving average. That is my setup. 50. I change it to EMA. Then color white. If I that time I'm using red background and black background, I usually use white, but I can change it to any color I like. Let's say green. Or my favorite color, purple. That's my favorite color. So I apply it. Then I'll make it thicker. Most of the time I make it thicker. Then I apply it. Okay, this is a DNA 50. Then I make it thicker. Okay, this is how once it's below this moving average, I should know that the market is trying to form a bearish trend, a bearish downtrend. You can see it's below. So any trade I will take from now to be lower option. Lower option. If I see any opportunity, maybe a fake retracement, maybe the candle try to form a bullish candle like this one. Maybe it's trying to form a bullish candle because it's lower. I'll take put option. And you can see the curve, the moving average is curved, the way it's curved. So it's curving like something like this, like this. So if you observe the movement that is curving like this, but if it's trying to go like this, and all the movement is below this moving average, so as you know that any at the time, I will just paste put option because it's below this moving average. Assuming that it's above this moving average, so I should be looking for call opportunities. But if below this moving average, I should be looking for put opportunities. So if you want to be using this strategy on indicator, you can use it, but I will show you 70% winning ratio. So I use that when I start trading, but I do that it's a waste of time for me. So that's why I ventured to candlestick and naked chart. But if you want to study, want to really know about candlestick, just use any of these indicator, other moving average, PCI or Bodega Bank. Okay. So now if I see any strong sign or maybe some distraction here, and I see that it's below, I'll just place put option. Placing put option, put option. So as you can see now, the market is trying to leap on this level. So the market will now be leaping on this level, telling you that the market now is in downtrend. Bodega Bank moving average have confirmed to us that the market is downtrend. This CCI also has confirmed to us that the market now is in downtrend. So all what you'll be doing is to look for good opportunities when you're using any of these data. Like this one, above the moving average, then you look for call opportunities. Weak buyer's entry from this level, call. Weak buyer's entry or the seller's entry from this level, call. Weak seller's entry, bullish momentum, call. Weak seller's entry, far from the moving average, put, call, put, call, put, call. You can see it even served as a support and resistance, but it finally broke the level. So when it finally broke the level, it becomes downtrend. That is below this moving average. Okay. That is how you can use indicator to improve your trading. You can use indicator to improve your trading. You can see that everything that is below the moving average is put. Buyers try to enter here, sellers enter. And the CCI also is showing us that the market is downtrend. It's leaping on the lower line. So it's a sign that the market is downtrend. The buyers will not interrupt. But if you see a strong move like this one, this trend, this line that I see here is this bearish movement here. But if you see that the market is sleeping on the upper line, that is uptrend. But if you see a strong move like this, forming a U or a N form from that leaping line here, you should know that downtrend has started. And you should confirm that from the candle. So you should be using the same thing, confirming from the line here and the candle that form and the moving average. That's how you can use indicator. Most of the time I use RCI, but I don't like RCI. It's not good for me. That's a relative strength index. So I use it like that. I don't apply any. So they give the same signal with CC high, but because of the overbought and the oversold, that's why I don't like it. They move the same thing, but most of the time they are lagging people. So you can use them to put your trading. You can use them when you apply them and when you observe the hands. So that's why when I see, that's how I learn. If I see the market is in downtrend like this, I will check the breakout of that candle. Then I will check the CCI, what happened to that CCI. Then I will check if it's horizontal band, what happened. Then I will not check the candle. So if it is candle that breaks the level, that is why I just say goodbye to indicators. That's why I decided to say goodbye to indicators. So now I don't trade with indicators, so I trade only on naked chart and graphical tools here. So when you want to place your trade, try to reason market first before you place your trade. You can see downtrend like this. Don't say because it's weak bias, you want to place put option. Try to reason why this weak bias is not here. and the trend that started, try to reason why it is formed here. From the beginning, try to reason. So if you can reason all this within 1 minute, you are a professional trader then. So if you want to start, you can start with 5 seconds, 5 minutes. Try to reason them. Don't rejection, sellers entry. The next buyer here is here. You see rejection, you just place put option or call option. Okay. Signal. Okay.
No. Okay. Can we talk about weeks?
The weeks. Okay, let me talk about
Yes.
Let me talk about weeks first. The first slide, I think the first slide we had some weeks ago. I talk about the important candlestick, the psychology behind all those the weeks. So I use that to explain. The weeks here, we have seller entry here. Seller entry here. Seller entry, seller entry, seller entry. So you should not focus on weeks. Don't too much focus on, but try to observe them, what they mean on the chart. So that is not the main thing. The main thing is the candle. The main thing is the candle. So which is not the major thing that you should focus on, or if you consider that too. Here we have seller entry here, seller entry. This rejection pants. We call it rejection pants. Rejection from here, here, here. Rejection pants. This one also rejection pants. It means this whole area is a rejection pants. In a psychological way and in a professional way, when you want to take your trade without drawing levels, that is what I did. I think I made a video on this. So most of you will not understand what I do if I place my trade. I place my trade on rejection pants, which is the week. If I see the market is approaching this week, all these rejection pants here, I will know what to do. And I'll just focus on the candle. If I see any rejection, I'll just place stop. You can see the candle close at the rejection band. No need to draw the left, no need to draw it. If you want to draw it, no problem, but that's how I trade. I don't draw left. Look at where this candle close. It close at this long rejection. So this is a strong bias area. Strong bias area. Why I say strong bias area like that? If you see a candle like this upper week, and you see another one like this lower week, telling you that from here to here, if this is a bullish candle, from here to here, the buyers try to reach this level, sellers enter, and then buyers close here. There's a gap to this level, telling you that at this gap, the buyers and sellers are there. Buyers and sellers are there at this gap. You check on the 5-second chart, you see that there are some bullish candles that is forming here, forming. But on reaching this level, it rejected from sellers. Now bearish candles start forming. So all this scenario happened on this week. So it means that the buyers and sellers are fighting this week. Now the candle close here. The main level is here, which is sellers area. The candle close here. If there's no sellers here, you place call. If there's sellers here on the left side where this candle close, you place put. Same thing here, same situation here. Buyers here, the candle close here. If there's no buyers on the left side here, you place put. If there is buyers area where this candle close, you place call. Now look at this. Look at this. Buyers are here, buyers are here. Look at where this candle close. The candle close here, but look at where the candle open. So because of fast momentum, that's why this is the main disadvantages of OTC market. You can see it close here. So buyers are here. Buyers to the area is here. So the candle closed here. It closed here. It's still far from the buyers area. This area or this whole area. So the next candle was what? Bearish. Assuming that the buyers started from here. Next candle here is bullish. Give another example. So that's why we trading with the wicks. The video I make is that not all the time the trading will just be happening like that. The market cannot move the same movement all the time. If the market should be moving like this all the time, most people will have become billionaires up to now. But the market will not move all the time. That day that I upload the video is that I just saw the move. I noticed that this is what the market is doing at this time now. So I just paid. So not all the time I will be seeing such opportunity, not all the time. So that should not be the main problem. Now look at this. Concerning this, that Mr. Edward said, he said, when you draw area like this, the seller's area, and you got rejection from here, why this candle was bullish? Okay, you should consider that why this candle even formed bullish here before you consider this. You should consider that why this candle here formed here before you consider this, and why this rejection formed here. This rejection, something else. This rejection you are seeing here, you will see some sellers entry on 5 seconds. You can see starting from here to here. This is the seller's entry you have seen here, 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 here to here. That's rejection. So already sellers have entered. So that's why when you are placing your trade like a marginal of safety, you should wait that the candle to reach this level, just this put option. Then it should go below your entry because we have some strong sellers here. That is what is happening here. That is what happened here. Not that when this candle rejected from here, the next candle should be bearish. Already the sellers have entered. That's why we are seeing this rejection. So that is if you see a fast momentum and you enter your trade here, like put option, you still want this trade within 1 minute. It will close below your entry because you know that this is seller's area. This is seller's area. So it still close below your entry. So that is why this candle is formed here. That's why the next candle was bullish here. As if that is nothing, it's not something like that. Maybe very small rejection here from here to here. Next candle here is bullish. But it's already shown that the sellers will enter because of fact to this level, the candle, the sellers reject. So already sellers have entered. So the market might reach this point here. Once you look at the left side and you see a strong seller's entry, just place put with margin of safety. You just place put with margin of safety, then the market will close below your entry. Once you close below your entry, you know that the next candle was to be bullish. So already sellers have entered on 5-second chart, which we have confirmed. So you should not expect a bearish candle here. If you know that this strong candle will not form a bullish candle here. The rejection is not too enough. It's not still enough. Like this one, strong rejection and weak body. But here we only see strong rejection, but not weak body. There's no lower rejection here. So no even sign that the seller dominates this candle too much. We only dominate this candle from here to here. So if there's no enough domination of sellers on this candle, that's why the next candle will form a bullish. Like here, we can see weak buyer's entry, a strong rejection, weak buyer's entry, with a strong rejection, weak buyer's entry, with a strong lower rejection, telling you that the sellers dominate this candle. But here we can see strong bullish candle with strong body, weak, strong rejection from sellers. So already sellers have entered the market. So if you place your trade here, you still want the trade. Okay, I think I will make video on that. How to place your trade with margin of safety. Once the market reach the seller's area, then you place put option. Then you saw this bullish candle. You look at the left side, you see the next level is here. Once the market reach the level, you place put option. Once the market reach the level, you place put option. Next level is here. Once the market reach the level, you place put option. So though the market will still close below here, I think I will make video on that. How to trade that. Now here, this is buyer's movement. So you should not be expecting that the market will come to this level or this level. The market is moving in this direction. Market is moving in this direction. And for sellers, the market too is moving this direction for sellers. This direction for sellers. So after the breakout, a weak buyers with a rejection, sellers enter. Then another one is this. If you have a rejection like this, a rejection and a strong rejection like this, look at where this candle close. The candle close inside this area. So most of the time, the next candle is bearish. But if you have a rejection like this, a candle like this, a candle like this, the next candle here is bullish because it closed above this area. Assuming that it closed exactly at this area, it should be bearish. Or it closed inside this area, bearish, but it closed above. So you should know that like that is what is happening here. There's a small rejection here and it's closed above bullish entered. But here, this strong rejection, it closed inside the area, sellers entered. Same thing here, it closed above this area, buyers entered. Here, it closed below this rejection, sellers entered. So that is how you can place your trade when you observe this market. But you should not only observe that, try to observe the candles and the behaviors and the rejection, all everything together. Candles, rejection, behavior. The first thing you do when you want to place your trade, check the trend. Draw your level. Look at the candles, the live candles. Look at the current or the past candles. That is, when you are looking at this candle, try to look at this. What happened to this? This is a strong reversal from the seller's area. Now you are looking at this candle. Now look at what the market is doing. The market is moving uptrend. You should know that the next level is here. Then when you look at the level, you saw this candle that formed. It formed because you can see the market is uptrend. After downtrend, the market starts going up. That's why I say focus on the minor uptrend 80% most of the time. Now it formed here. It still close at the buyer's area because the next seller's area is here. The next seller's area is here, or the next seller's area is here. Next candle is bullish. Strong bullish candle, close above this line, bullish. So when you're analyzing the candle, the market like this, you'll be following your mind, will be rubbing together with the market. So the market will not go against you. Or if you are trying to fight the market, if you place put option, you lost. Again, you want to place put option, you still lost. The market will now confuse you. When the time you're supposed to place put option, now become call option. So the market will try as much as possible to dupe you of your trades. Okay. Now, concerning the signal that you guys are talking about, like I told you that the signal, I cannot assure you 100%. There's nothing like 100% in. It is only your strategy and you that can make the trade become 100% for you. There's no strategy that can give you 100% in trading. It is only you and the market itself and your understanding that will give you 100% in trading, and your self-discipline that will give you 100% in trading. So now for this signal, I can't assure you 100%. Let us say 80%. 80% most of the time. 80%. Why is it 80%? I'm likely to predict one candle. I'm likely to predict one candle, but I may not observe the area very well because that is signal. So just want to reduce signal. So I may not observe the area very well, and the market go against us. It go against us because of my mistake or hurriness. So that's why I take it as 80%. 80%. So if you have losing trade or maybe you lost so much, you can stop or we stop everything. But don't focus on 100% signal. And it might happen that in a whole day, we can only see one signal in a whole day. It might happen that in a whole day, we can see more than 10 signals. You know, this COVID-19 that is roaming about, that is spreading, that's affecting the market, is also affecting the financial market. So it's not affecting only some countries, but it's also affecting the market move. Like, you're assuming that the market opens, that is the real market has opened. If you see this Euro USD, the way it moves, if you notice the movement, the way it moves, it doesn't respect levels. This Euro USD, it doesn't respect levels. And the way it moves in an angry way. It might reach this level, then went up, then reversed back. Testing the support level, went down again, reversed back. If you check on, I think that should be daily chart. Because when I try it, yes, this is it. This is resistance level on the daily chart. This is support level. You can see it went up and then it passed back. So this is a breakout. If someone wants to trade this type of market, if you say this is a real breakout, which is not. On the same thing now on the support level, it breaks the level, then reverse back. Now it's heading to this level. So at this time, you should not. This is at the disadvantages of the signal. That is, if any, if any news to go against our prediction, that means we are already in loss already. So I will assure you not 80%. And it can be a whole day that we have one signal or two or three or more than 10. I can just look at the market, and this is what I will do. I will set the time, the candlestick time to be 5 minutes. So I will try to compare from 5 minutes and 1 minute. That is, if I see any short signal, the same thing on 5 minutes and 1 minute, then I will tell you that you should go and set your expiry time to be 5 minutes. So once you set your expiry time to be 5 minutes, then I will tell you that at this also level, most of the time, not that I will just give you short signal. I will tell you that if the candle should come to this level, tested the last level, you place put on 5 seconds, or 5 minutes, sorry, on 5-minute candle. Or if the market should come to this total level on the support level, you place put. Or if the market should be testing the level, you place call. So the signal can come in that way. Or I can just say, set up the expiration time to be 5 minutes, and then place put, set up your candlestick to be 1 minute, place put. That means the market will go down to that level on 1 minute. So the signal can come in different ways, and it will be only on WhatsApp group. So I will try to create a separate group for that. So if you are interested, so don't hurry yourself. So it's only for those who are interested, not everybody. Don't hurry yourself. And if you are interested, you can join. If you are not interested, no problem. But one thing I want you to focus is this: learn how to trade yourself, not the signal. Learn how to trade yourself, not the signal. Till the time I started trading, I don't trade the signals. I don't even want any signal. My own signal is myself and my chart. So this is why I learned how to trade, not signal. So you can also be using signal just to help yourself, but I'm not assuring you 100%. The market, most of the time, maybe in a week we can have like 2 or 3 bad days, 2 or 3 bad days. So not all the time that you see me posting on YouTube or uploading video that I don't have loss in trade. I have loss in trade in the week, but it's very rare for me. A whole week, 7 days in a week, my loss in trade can be maybe in one section. My loss in trade can only be 2 loss in trade in one section. So it's very rare for me to have many loss in trade in a week. Most of the time, last week, I think the starting of this next week, which is yesterday, Saturday, the loss I have for that week was 2 times, 2 times loss, and the losses was just late entry, late entry. That's the 2 times. That is one on Tuesday and one on maybe on Friday or Saturday. There I upload that video. Those are the 2 losses I have for that day, for that week. So losses can come like that. It can be more than 2, but it's very rare for me to have 7 losses. No, it doesn't. I didn't have 7 losses on a full week. So it depends on how the market moves. And I don't trade on news time. That is just it. I don't trade on news time. There's nothing concern news. So once I see what is on the chart, then I can predict what will be the next candle. So if I see anything, if I see any signal, just send it to you. And about the price, you can see that the price is very low. If you go to other signal service providers, they will charge you with a bigger amount, but the price is very low, which I said, $50 for 2 weeks. $50 for 2 weeks. So that means 1 week is $25. Per week is $25. So for 2 weeks, $50. So as time goes on, I might increase it. Because that is my first time in reducing signal. I've not done signal provider before. I only teach how to trade, not signal provider. I don't provide signal before, but I only teach how to trade. So in the long run, I may increase the price. I may charge the price. So you just start at least for $50 for 2 weeks. So if you are interested, no problem. And I have told you the advantages and the disadvantages. So you should not blame me for anything if you have a loss in trade. So the market is not like that. This season that we are now, market is very bad. Not good. Market is very bad. That's why I didn't even to make a step to go and trade on forex. So I want the news to end before I start trading on forex. So learning forex, teaching forex now, I don't do that now for now. So I stop. I'm not paying that. So until everything is tied down, everything is normal, come back to normal before you can enjoy the signal. But for now, you cannot enjoy the signal. But if you are still interested, at least it's going to be 80% winning ratio, not 100%. Okay. So all the details for the payment and those of you that are interested, you can notify me on the group chat for them with that. But first thing, once the signal comes, just if you want to learn, if you really want to learn how to trade by yourself, once you receive the signal, check the chart. What did I see before I send the signal? What did I use? What method did I use before I send the signal? So try to do that. You can also use that to learn. Okay. I think I'm done for today. So any question? Any question? Okay, now everybody should talk. Okay, so I've moved everybody. So everybody should talk now. If you have any question, this is the time for question and answer. Do you have any question or you have any suggestion? You can add. You are free to do that. Yes, yes, I'm waiting. Any question? Any suggestion?
Teacher.
Yes.
Being that you will be providing the signal on 5 minutes.
Yes.
Number one, I don't know, will it be through text? Will you be holding a session or you'll be doing text?
You mean the group chat?
No, I'm talking about the signal that you'll be providing. Will you be like sending a WhatsApp?
Yes.
Or you'll be having a session?
No, sending as WhatsApp on WhatsApp.
Okay. So you'll not be having so you'll not have an opportunity to explain. We'll have to find the reason on ourselves.
Yes, yes.
Okay, okay.
I will just make a new group on the WhatsApp.
Okay.
And just we join the signal.
Okay. I thought it would have been a session where you could explain that.
I think so, but it's not something that I always have time to do that.
Yes, yes.
But most of the time, I don't have time to do that.
Okay. Thank you.
Any more questions?
Hello, sir. Hello.
Hello. Okay.
How do I know a trend is ending?
It's ending.
Whether a minor trend or a major trend, how do I know a trend is ending?
Loss of momentum.
Okay.
Loss of momentum and extortion candle. Like this is a downtrend here. You can see it started from here and it ended here. Here we can see some buyer sentiment because market reverse level. Because of this level, buyer centers. The sellers become weak here. Because of this level. Because of this level, this rejection band, buyer center again. Again, buyer center because of level. Now, because the buyers have been trying to enter here on this level, that's why minor trend was up here. They tried 1, 2, 3. So extortion candle and a weak candle is a sign that the trend wants to end. The sign that the trend wants to end. Here we have a long trend. So at this time, you should not expect the trend to end. Here we can see a momentum like this, but a weak candle appear here. The downtrend started. Extortion candle, a doji candlestick, instead of sellers, a doji candlestick, uptrend started. A weak bullish candle, after a strong bullish candle, downtrend started. A weak bearish candle, this uptrend, buyers continue. So that's why we are seeing the movement that the movement is moving uptrend, yes, uptrend. That's how we can confirm in loss of momentum or extortion candle. So I want everyone to go and practice the buyers and sellers that I'll show you on the video. Buyers and sellers, you can predict 4 candles. You have good to do. You can predict 4 candles. Right? You can predict more than 4. Because you don't know when the market will change its move. Look at this rejection, weak seller, weak buyer, telling you that this is the seller's area. At the seller's area, we are seeing weak buyer. That means here, this candle is supposed to be bearish, but you see bullish. Seller did not enter, buyers entered. Buyers enter again, weak buyers at the seller's area. Weak buyers again. Now, weak buyers must not continue this level. It is strong rejection. So sellers enter. Weak sellers, buyers enter. Marbozu, sellers enter. Strong bearish candle, sellers enter. Weak bearish candle, continuation sign, sellers enter. Rejection, upper rejection, new high, buyers enter. So when you are reaching the market like this, with this uptrend, you combine this uptrend here, you can place your trade with confidence. And when you at least predict 4 candles. So that's why I started. I will make sure that on this area I predict 4. Then again, I will wait for 2 hours or 3 hours or 4 hours. On this area, I will make sure I predict 4. 2 hours or 3 hours, I wait. On this area, I'll make sure I predict 5 or 4. So I'm done for that day. That's how I take trade. I don't overtrade the market by predicting 10 or 20. No. 4 is enough for me here. 2 hours or 3 hours, 4 again is enough. If I can see 4 opportunity here, 4 candles here, 2 hours or 3 hours, 4 enough is enough. 4 candles here is enough. So most of the time, if I didn't have time to take 3 sections, I can trade on 7 candles or more than that. But if I want to take 3 sections for my trading plan, 4 candles is enough. That's why my winning ratio is high, more than my loss in trade in a week. I don't have too much loss with a week. And my loss most of the time is late entry, not wrong prediction, because I don't overtrade the market.
Hello, sir.
All right.
Thank you very much for the signal. But using the EMA that you mentioned just now,
yes.
Can I understand when the market will be ranging using the EMA?
The market will be ranging?
Yes, when the market will be.
The market will be leaping on the support and resistance. Let's see here. Like now, the market will be leaping on the support and resistance. Here, the support, the resistance, the support, resistance here, support here, resistance, support. So the market will be leaping on the support and resistance when the market is in ranging. The moving average will be leaping on the support and resistance. You can see most of the time it leaps on the support because this is uptrend. But now it leaps on the resistance because this is downtrend. But here ranging, it leaps all the time on support and resistance. Support, resistance, support here, resistance, support. So it's sleeping on those lines, on those turning points. That means here and here, this area is a ranging area. Same thing here, ranging area. And the ranging area is clearly seen without even using moving average. A ranging area is like this, swing high, swing low, swing high, and swing low, and swing high. Market continue move, a strong move. Here again, swing high, swing low, swing high, swing low, swing high, and swing low. Before it starts consolidating or forming a ranging this area. So the market will be leaping at the support and resistance all the time on those levels. Okay. Okay, guys, I think we should stop for today. And concerning the signal, I will notify you on the chat. Today we start. Just need time because I need not only me, I will be doing that. So I need someone to back me up. Today I just want the signal, just go straight chat and do whatever. No problem with that. Fine. Okay, guys. Practice. Don't relent. Keep trading. If you have a losing trade, focus on your winning ratio. Don't focus on your losing trade. But the market, help us.
Oh no.
Help. Observe the market. Don't relent. Keep practicing. You will make it. So don't relent if you have a losing trade, if you have some bad days. Not all the professional today, and professional today that you see today, they don't have good days all the time. I have bad days most of the time. But I have bad days. But in my record here, my good days are more than the bad days. Not really bad all the time. That's why it is not good. Before you become a professional trader, you must pass through so many things. And hard work also is part of it. If you practice all the time, if you practice what I just said now, you will see that before you know, you start improving. But if you practice once in a while, you will not improve anything. You will continue practicing once in a while. But if you practice hard, some that complain that it's still hard for them to get the can, don't worry. Very soon you will see that it becomes easy for you. Want to practice hard and don't give up. Don't give up with anything. Don't relax. Continue practicing. Okay? Okay, guys. Thank you for attending the class. And anything else, everything will be known, big note on the group chat. Okay? So, good night. And
Thank you,
have
teacher.
a nice day. And stay safe.
Night. Thank you. Good night.